Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
Good morning. Hi, here are your top stories. Markets on edge. The US says Russia is adding troops along the Ukraine border, rejecting claims of a pullback. Stocks decline while treasuries and the yen are bid. Fed minutes, the FOMC reiterates a probable March hike, but questions remain if it will be a bumper 50 basis points. And luxury lift-off. Gucci sales soar past pre-pandemic levels as Kering's biggest brand draws shoppers to spend.
We have a couple of thoughts on Gucci, actually, so we'll get to that in a second. That's not moving the markets. It's very clear it's still two things that are moving the markets. I would also say it's not the minutes, Tom. They're also moving the markets because it was pretty much as expected. And, of course, this is a look back at January. And since we've had a big inflation print and also a big boost to growth. So markets are worried, though, in general about tightening, and then they look at Ukraine.
Yeah, this information war that seems to be going on now between Moscow and Washington's allies in NATO as well, adding to that uncertainty. And as Francine was pointing out, we had the FOMC minutes, but nothing that new. So you had some of the bets on a 50 basis point hike in March coming off a little bit. Some interpreted it as a more dovish set of minutes. But of course, those minutes came before the newest and freshest inflation data out of the US, which points to continued upside for prices. Let's check in then on how things are playing out. You're seeing gains in France. Part of this will be the luxury space and what we saw in Kering, that very strong set of earnings powered by Gucci and Yves Saint Laurent. Currently up 0.5% for the CAC 40. The Spanish IBEX is down 0.2, and the FTSE 100 is lower by 0.1%. Let's switch it on and have a look at how things are playing out cross-asset then. We'll look at the futures, and we know, of course, there was a move into safety. We've seen that reflected in gold. We've seen that reflected in the yen and the treasuries as well. Futures currently stateside pointing to losses of 0.2%. It was a mixed close yesterday as investors digested those FOMC minutes again, the back and forth as well over Ukraine. The US 10-year currently at 150, so just up 2 basis points. Brent is at $94 a barrel. It is down now 0.7%. There's the geopolitics around Russia and Ukraine, but also the debate, at least the movement, the traction that's being had on this Iran deal, and comments from some Iranian officials suggesting we're getting closer to a deal. Spot gold is bid still up 0.3% at 18.76. Francine.
Yeah, I love actually my favorite comment on oil, without a doubt, comes from Javier Blas on Twitter about 2 days ago. He says, when people think there's no hope of a deal, that's when maybe we get a deal with Iran. And actually, he seemed to be suggesting the right thing, and that's filtering through also to some of course, some of the basic resources, which is one of my big sectors on the move. So if you look at the 20 sectors that we're actually covering here, and it's a little bit of a mixed bag. So healthcare, a little bit of pressure, but I have about 8 industry groups on the up and about 8 on the downside. The biggest gainer is consumer goods. They're gaining 1%. The story there is about inflation and worries about inflation. Auto parts, chemicals, technology also on the up. And then on the down, we have travel and leisure, banks, and energy. So those are also the industry groups that were getting the most in the last couple of days. So you can see it's really a bit of a mixed bag as we try to figure out tightening and Ukraine.
Okay, let's break it down into some of the individual corporates then. Still another big day for earnings. Airbus coming in, just retaining its ground for a third straight year in terms of the biggest maker of planes above Boeing. They had record net revenue in 2021. They're ramping up production, boosting employees as well as they see greater demand for their aircraft. Currently gaining 1% net stock, of course, listed over in France. The Nestle story is slightly different. Yes, they beat for their earnings of 2021, but they've warned about the inflationary pressures. They've been able to offset that to some extent with price increases, but questions for investors will be to how long and to what extent that can be sustained. Currently down 1%. The other big story, luxury, and I know Francine has views on this, Kering, Gucci, Yves Saint Laurent, the owner, of course, Kering, of the group company, gaining almost 5%. That demand just incredibly strong for the luxury part of this sector, and they expect that momentum, the CEO saying, to continue in 2022. Francine?
Yeah, I really want to know about some of the price increases. That's my comment. When it comes to a lot of the luxury, I mean, we're hearing that Chanel has increased prices by 30% because consumers still are willing to pay for it. So that's probably a healthy margin from Kering, getting some 4.6%. Now, we have some great charts. I know you're looking at something that we need to talk a lot more about. Tom, let's also get over to our Bloomberg MLive managing editor, Mark Cudmore. Mark, I'm excited. You're talking about UK gilts, and it basically really goes to the heart of the matter that a lot of it was priced in. So any inflation number blowout won't make that much of a difference, maybe.
Yes, absolutely, Francine. This is just another angle of the inflation story, the pricing story you're talking about. You won't be surprised to hear I am not so concerned about the price increases in the luxury sector. That doesn't affect me quite as much personally. But I am very interested in the broader inflation story and what it means for yields. And this week, we saw a monster jobs report in terms of the wage increases on Tuesday. Then yesterday, it was UK inflation. Clearly, the conclusion was yields at the front end were going to surge higher again as people were going to bet on more rate hikes faster and quicker from the Bank of England. Instead, we saw yields slump at the front end. In fact, two-year yields fell 13 basis points in the day. They came down actually almost 15 basis points from the highs straight after the inflation report. And that is the biggest decrease we saw in a day since the Bank of England really kind of upset the whole market by not hiking rates as guided as kind of back in early November. Now, you've got to remember that led to the kind of broad kind of blowout in rates markets and really kind of confused people, that kind of whiplash, and then started the subsequent steepening. So this is a really big turn up for the books, and what it emphasizes is how stretched that front-end rates trade was. This was hot inflation data. The logic is, yes, higher yields, but they could not go higher, and that means this market is over its skis. There's probably more downside to come in yields, especially because we've got those geopolitical tensions, which are creating a little bit of risk aversion and creating more demand for bonds.
Yeah, I mean, it's very clear now for the Bank of England, money market is pricing about 36 basis points of tightening from the BOE at its next rate decision. Mark, I don't care if you say it on live TV. I know you're lusting after a Gucci pair of loafers. Or Mark Cudmore, looking at the Gucci loafers. No, there you go. I've never heard you not want to, with a comeback. So we'll look more at the luxury sector. Bloomberg's MLive managing editor, also looking at gilts, Mark Cudmore.
Okay, let's get into some of the key market drivers then with our markets editor, Christine Aquino, and Federated Elmy's Louise Dudley. Christine, let's bring you in at this point and just get your views on what we saw from those FOMC minutes. What stood out for you? I'm particularly interested in your views on the balance sheet, the commentary around that.
Absolutely, Tom. I think it was very interesting when I was reading through it and noting that they seem to be wanting to focus the offloading process on these mortgage-backed securities that the Fed, of course, holds in its balance sheet and have a preference for keeping their treasury securities. And so that tells you a lot about kind of the potential direction of travel of the various rates in the real economy in the U.S. And so if we're seeing that offloading in the MBS market specifically, that, of course, has very big implications for homeowners and their mortgage rates, of course, and anyone who's looking to get into the property market at this particular point in time is probably going to find it quite tricky. And of course, this gels with some commentary that we've seen as well from the likes of Credit Suisse, talking about how it could be one potential way for the Fed to achieve a soft landing would be to raise or find a way to raise mortgage costs, which could filter through to the rest of the economy, of course.
Yeah, and Louise, I don't know whether that filters through some of the European market open that we're, moves that we're seeing today, but it's very clear that we're still looking at tightening across the world. Markets trying to price in, although they maybe got, the front end of that. And at the same time, Louise, we look at what's happening in Ukraine. So where do you want to be invested in right now?
So, yeah, you definitely kind of mentioned those are the two biggest things that everyone's looking at, people wanting to get ahead of some of these rate rises coming through, people now kind of moving expectations towards maybe a 50 bips move that, we do expect a lot of those interest rate sensitive assets to be, one of the better places to be, particularly with the Ukraine headlines that are out there, people are feeling nervous. It is like a daily news flow in terms of that, and definitely people are feeling a little bit more risky. We're seeing a bit more of a move into those defensive areas of the market, and in particular also focusing in on dividends and buybacks, you know, as key areas of getting money back, getting some of that return when some of the growth outlook's looking a little bit more challenged.
Okay, interesting. We certainly want to get your views on the earnings story as well, Louise. But first of all, Christine, when it comes to what we're seeing with Kering, currently the stock gaining 5.6%. Then you've got the retail numbers that came out stateside that were very strong as well. But Nestle, on the other side of the retail spectrum, warning about the inflationary impact. How should investors be weighing up these multiple different stories when it comes to the strength of the consumer?
Well, Tom, it's really interesting, this divergence between these two companies. And it really speaks to how consumers are really thinking about inflation at the moment. And it is not a uniform inflation story for all companies. It doesn't necessarily mean that higher costs in terms of inputs and raw materials would translate to more difficulties for companies across the board. We're past that narrative now. I think we're now seeing this narrative of a divergence between more inflation vulnerable companies such as Nestle and inflation-proof companies such as Kering. And certainly, you know, the luxury sector has really proven its pricing power, and very curious as well, as Francine is, over the pricing of Gucci handbags in the next few weeks and months. But, you know, it's interesting, though, of course, in the Nestle story, we're getting some breakdown in terms of the pricing power there. And what really struck me was the fact that they seem to have pricing power in some of their higher-end products, like Nespresso. People are still willing to pay for their high-end coffee. And so this really shows that people are willing to pay for goods when they see the value in it.
Yeah, and there could be actually, this could, of course, hurt the fabric of society if the rich can spend and buy, you know, Chanel or Gucci bags for 10,000, but then actually your toothpaste goes up and you're struggling. Then I don't know whether, Louise, there's, you know, a political read across in who people vote for and whether that completely changes the fabric of society. How do you play this? I mean, without, you know, talking politics, what does it mean for an investor like yourself?
So I think, you know, one of the things that is quite key is, you know, energy costs, freight costs. We're definitely seeing, say, a company like Nestle, they have over the last couple of years been trying to kind of premiumization their products, move that higher margin. We know that some of the raw goods, even, you know, Ukraine is quite exposed in terms of, you know, some of those commodity driven plays that are going to feed in. Anything that has that tighter margin is going to be more squeezed. That said, we are seeing maybe on the food retail, which is quite a tight margin type business, that actually those businesses are able to pass on those costs. So that's another key dynamic on top of the margin in terms of whether your customers are able to take on some of that. And definitely we're seeing within, say, maybe the paper packaging areas that they are able to pass on those costs. Maybe for Nestle, where the consumer is more squeezed, particularly when they're also being squeezed on energy costs and maybe tax changes as well, that's going to be more of a challenge for them.
Okay, Louise Dudley stays with us. We'll get more of Louise's calls after the break. Christina Kino breaking down some of the key themes across these markets. Thank you.
Now, coming up, we'll have the latest analysis of the Russia-Ukraine tensions. That's coming up next. We'll also look at the price of oil whipsawed after we potentially could see an agreement also on Iran. This is Bloomberg. The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. and then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. We are 14 minutes into the European trading day, and you can see European stocks getting some 0.2%. Of course, a focus on tightening. Our Christina Kino had some great points, of course, about mortgage and treasuries, given what we heard on the minutes. But I would say overall, the market really discounting what the minutes said, because since we had a strong inflation imprint and also a pretty strong GDP, all eyes on Ukraine, Tom.
Yes, the geopolitics, and the US saying that Russia is adding troops along the Ukraine border, rejecting Moscow's claims of a pullback. Meanwhile, European leaders are holding an informal meeting in Brussels this morning to discuss the crisis. The Kremlin has repeatedly denied it has plans to attack Ukraine. Joining us now is Bloomberg's Russian government editor, Tony Halpin, who is in Moscow. Tony, great to have you on the show and to get your insights. What is Russia's response then to accusations from the US, UK, others in NATO that it is still increasing troop numbers near the Ukraine border after saying that in fact it was pulling money or some of its military back?
Well, they flatly denied it this morning, calling the US and UK claims false, and they said they're about as fake as the claims that there would be a Russian invasion yesterday or the day before. They've also announced, or the Russian Defense Ministry has announced today as well, that another trainload of military equipment has been pulled back this morning, tanks coming out of Crimea and more troops withdrawing. So they're sticking to their line that there is a drawdown of troops and denying the US and Western allegations that in fact there's a troop buildup near Ukraine.
Right. Tony, how difficult is it to verify? I mean, I know they're neighboring countries, but are there actually, do we have cameras? Do people have cameras to try and see the in and out movement? And how much of a delay is it? Do we find out 2 or 3 days afterwards, or how do you measure it?
No, I mean, there's clearly a lot of satellite activity going on along the border here, and people are trying to figure out which divisions are where. Russia, it has to be said, it has already announced that it's having drills, so it's not a surprise that there is a lot of military equipment there. The question is intent, and as you said, Russia's always denied that it's going to invade or attack Ukraine in any way, while the US and others have said that this build-up is particularly threatening. The Russian Foreign Ministry again this morning said that, in fact, the drills are winding down, and Deputy Foreign Minister said that people should just calm down and that things will wind down as scheduled this week.
Okay, Bloomberg's Tony Halpin on the ground for us in Moscow. Thank you. Let's bring back Louise Dudley at this point, Federated Hermes Global Equities Portfolio Manager. Louise, where do you want to be looking for safe havens? Do you want to be adding safe havens? And where within the equity space might you be looking?
So we continue to look for a balance of value and growth. I think with the interest rates hikes coming, a lot of those growth names have sold off. Some of them are maybe starting to look more attractive. It is a big focus on earnings yield, a big focus on, those forward-looking outlooks for companies at the moment. I think, one of the big things, as we mentioned before, in terms of those companies that are able to pass on that those price rises from inflation, also companies that have maybe hedged some of their energy costs in the near term. are also those that are kind of seen as safe havens to a certain extent, because they're not going to be impacted by these elevated oil prices that we're continuing to see. So to a certain extent, remaining balanced, but also moving towards that kind of value cyclical tilt as well, because, although, we talk about earnings, they've actually been quite strong, although not as strong as previous 2 quarters. So there is still growth out there. GDP numbers still coming in kind of above the norm. So in general, looking to have that balance within the portfolio of both that kind of value growth.
Yeah, talking about balance, let me bring you to our chart of the hour. At least it's one of my favorite charts, because I actually look at some of the havens out there. So thank you, Valerie, for putting it together. And it's very clear that the Ukrainian situation really slammed into markets at a time where uncertainty was already rife because of the side-popping inflation prints, and of course the Federal Reserve's acceleration towards a tightening policy. Now, what we're seeing is the difference between treasuries, Bitcoin, and gold. I like that we also chose Bitcoin. Luis, how do you play? I mean, you were talking about some of the the hedges that you could put in place, but how fast are some of these havens changing?
So definitely, we saw gold being quite strong yesterday. About a year ago, people were starting to say, okay, well, let's move into gold if that's the inflation hedge. Then people started to talk about Bitcoin also as a bit of an inflation hedge as well. I think we haven't so far seen that move into gold, but actually the companies that have reported so far in this earnings season on the gold side have actually been quite strong. So that's definitely an area that people are looking at. That said, for this half of the year, people expect the pricing to be weaker than we have seen. So, again, a bit of a mixed message, but there's definitely some companies which, where they do have some of that broader commodity exposure. So not just gold, but also maybe copper, which is got kind of good pricing at the moment, along with aluminium. So those commodity plays doing quite well so far.
Okay, some of the commodity plays there. Citigroup coming out and saying, look, the rotation out of US equities into global equities may be just getting started. Do you agree with that view?
I think, people have been worried about the valuation side in terms of US. And, Europe certainly hasn't rebounded as much from, kind of post-COVID. At the same time, the US is far ahead when it comes to, I think, kind of Omicron and some of these other reopening trades. So actually, probably in the near term, the US remains quite a good place to be, but maybe longer term, we will start to see that. The other big kind of question mark is with China remaining with their zero COVID policy. Europe tends to have a lot more skew towards that region. If they continue to kind of keep with the shutdowns, continue to see the supply chain constraints, that's going to be an issue for Europe. So maybe the US a bit more protected, some of those domestic names continue to do well in the near term.
Thank you so much, Louise Dudley, their Federated Hermes Global Equities Portfolio Manager, joining us today on the main market stories. Coming up, oil's crazy COVID ride. We've seen crude prices plunge into negative territory and now soar to near $100 a barrel. Today's Big Take looks at how we got here. We talk Iran, we talk Ukraine, we talk Russia. This is Bloomberg.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Welcome back to the Open. We are 24 minutes into your European trading day. European stocks just pairing some of the earlier gains, currently gaining 0.1%. Consumer products, industrial goods, technology at the top of the list when it comes to your sectors. At the bottom, you've got banks and energy. Futures stateside pointing to losses between 0.2 and 0.3%.
Now, the two-year COVID crisis, of course, put many markets, Tom, on a wild ride, but few have been crazier than crude oil, from total collapse in 2020 to the brink of $100 a barrel. Well, today's Bloomberg Big Take looks at the story so far and where we might go from here. For all of this, we're joined by our energy reporter, James Heron. I mean, James, thank you so much for coming on. I mean, look at oil. It is crazy. I mean, at some point we were negative. Now we're almost at 100. Is 100 a done deal? And psychologically, I mean, it's tough to swallow.
In some part of the markets, it has already happened. A thing called dated Brent, which is the benchmark for actual physical barrels of oil, hit $100 yesterday for the first time since 2014. Now, the price of futures isn't there yet, but it's not guaranteed we could hit that level. There are things that could happen, such as a deal with Iran to release its exports, which could change things. But overall, the supply picture is very tight, and the reason for that is what happened in the immediate aftermath of the pandemic in the spring of 2020 and the decisions that were made then.
Is that investment coming back now with prices at these levels, whether it's US shale or elsewhere within the OPEC Plus community? Is that investment starting to come back?
Not as it has done in the past, no. Shale producers who previously, when prices were at this level, would have been pumping as much oil as they could and drilling as many wells as they could, aren't doing that yet. They're after depriving investors from returns for so many years, they're really giving more money back to their investors and spending less drilling. The same is true of the majors, because they want to channel more money into the energy transition. They're not drilling as much, they're not exploring as much, and OPEC, there's questions about whether OPEC really can raise production much more than it has done already.
I have to say, I absolutely love this Big Take because it has everything. You know, it has like almost, love, war, price wars, friendship, betrayal. Like, is it only Saudi Arabia that could put extra barrels on the market?
Yeah, really, Saudi Arabia, maybe its closest Gulf allies, like the United Arab Emirates, have most of the spare capacity now. It looks like Russia, which is the second biggest producer in OPEC Plus, can't go much further than it's already gone now. Maybe next year it could. It still has the potential, but it needs to drill a lot more wells. It takes time. And other countries in OPEC, Nigeria, Angola, countries where like the big Western oil companies have been dominant, they're starved of investment, and there's not a lot of signs that it's going in to increase the production now.
James, thanks so much. James Heron, our energy reporter in London. I have to say, back memories of oil prices going sub-zero. I kind of put that at the back of my mind because it was in the middle of the pandemic trauma. Coming up, but Norges Bank Governor Øystein Olsen on Norway's post-COVID recovery. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Markets on edge. The U.S. says Russia is adding troops along the Ukraine border, rejecting claims of a pullback. Fed minutes. The FOMC reiterates a probable March hike, but questions remain if it will be a bumper 50 basis points. And luxury liftoff. Gucci sales soar past pre-pandemic levels as Kering's biggest brand draws shoppers to spend and shares rise. Tom, it's still very clear that the market's kind of on blinkers with, they want to know two things: tightening monetary policy across the world and what is going on in Ukraine.
Yeah, decoding the geopolitics is incredibly complicated, incredibly difficult. And in fact, going through that FOMC statement when it comes to monetary policy, also a bit of a conundrum. You had some calling it a dovish statement, but of course others pointing out that it came out, of course, those minutes well before what we got in terms of the fresh inflationary data that points to further upside for prices. So we're still trying to get a gauge on what happens in March, and the investment community and the market's still debating whether or not 50 basis points is in play for that first rate hike that is, of course, factored in for the month of March. The European markets have taken a leg lower. After coming out of the green, the gates in the green, you've had a move lower. Earnings, of course, also a factor, and you're seeing that reflected in the CAC 40 with the likes of Kering coming through very strongly. Nestle talking about those inflationary challenges, Airbus doing well, seeing that momentum in terms of demand for aircraft. Across the benchmark, then, you're seeing losses just 0.1%. The DAX is flat, range bound, and you're seeing losses of 0.3 on the FTSE 100. There's still a move to some of these havens, gold, the yen, also treasuries as well in the bond space. You see on edges just coming off, yields coming off around the edges. Let's switch it on and see how things are playing out sector by sector then. Again, the earnings story is still part of the mix as geopolitics and the central banks of the Fed primarily, of course, playing into investor movements. In terms of what's happening then, consumer goods up 0.9%. Auto parts also in positive territory, but most of these sectors now in the red. Not by a huge amount, but nonetheless there's caution in these markets. Energy is down 1%. We've seen some softness, certainly in oil. We've been breaking down that story just the last few minutes. Insurance and banks also lower by around 0.9%. Francine.
Tom, Norway's economy expanded faster than expected at the end of last year. Now, mainland GDP, which is just for the offshore oil industry, notched up 1.4% in the fourth quarter. The reading cements the outlook for a string of rate hikes by Norges Bank from next month. Well, we're now delighted to be joined by Norges Bank Governor Øystein Olsen, whose term also ends next month. So, Governor, thank you so much, first of all, for all of the interviews that you've given to Bloomberg over the years. When you look at what you were dealing with at the end of last year and what you're dealing with now, what's the main concern going forward? So if Omicron's dealt with, what does it mean for inflation forecasts?
Well, thanks for those words. It's been a pleasure to be here, always. You're right, I'm ending my term in a week. And then Norges Bank will present a new monetary report in March. And I'm not going to go into the sort of revised forecast, but I think you know, you can go back to our most recent report in December, and it's correct to say that we have been one of the first central bank which has increased rates a couple of times on the background of a strong recovery of the Norwegian economy out of the COVID crisis. And I guess we're still there. And then, of course, we have the new information on inflation, which obviously will affect every judgment on monetary policy going forward. But I think I should stop there by now, my own analysis.
Oh, please don't, sir. Don't stop there. Governor, give us a sense then, the data that you and the team at the bank are looking at in terms of the health of the Norwegian economy. What is your take now as you look ahead to the months and the quarters ahead for the robustness, the sustainability of the growth that you're seeing in that country?
Well, I think that's easy just to underline that the Norwegian economy is strong. I mean, we still benefit largely by oil activities, and at the present level of oil prices, we have huge, significant revenues from oil and gas exports. And then we have all the other strong forces also in the mainland economy, and we have seen, as I stated, a strong recovery. We have the activity level of our economy is back at the pre-COVID level. Unemployment is down to close to normal. So if prospects continue more or less as we saw it in our December report, and there's not that much new information. Of course, there are uncertainties around, and every forecast would change, but I think there are all reasons to be quite optimistic on behalf of the Norwegian economy going forward.
So, Governor, given also, Norway has changed some of the restrictions and become much more open, do you think that, the worst of the pandemic is behind us?
Well, I'm not a health expert, but we have, for a couple of years, based our forecast on the experts on health, both in Norway and internationally. And I guess I base my view on what we're seeing, and we have the vaccine. And although the number of people being infected are quite high by our standards, the number of people being hospitalized is going down. So I mean, that's the background for the reopening, the full reopening of the society, which took place a few days ago. So I think there are all reasons to be optimistic, both on behalf of the economy and as regards the health situation.
Governor, the markets are pricing in 3 rate hikes from the Norges Bank this year, possibly 4. Does that sound reasonable?
I should not comment on that. I go back to our recent forecasts, and there will be new information and a new monetary report from Norges Bank in a few weeks.
But, Mr. Olsen, so if we look back at some of the biggest achievements in your 11-year term, so overall, do you think the markets have understood what you've been trying to communicate and continue to understand what you had been trying to communicate now?
Let me say, I hope so, and I think we have the view that we have I think our communication is quite open. We present quite detailed forecasts on the economy, and we present the future path of the policy rate, which is consistent with the forecasts. And these forecasts are revised every quarter in normal times. So I think the openness is there, and I think my picture is that the markets appreciate that kind of openness.
Okay, Governor, your successor will be Jens Stoltenberg, formerly or currently of NATO, taking over as the central bank. There's been concerns from the opposition parties about his proximity to the leadership there in Norway. Are you concerned about the impacts on the independence of the central bank as a result of this appointment?
No, not at all. Most Norwegians know Jens Stoltenberg as previous Minister of Finance and Prime Minister. I know him personally as well, there was something that has to be clarified by the Minister of Finance, which made the decision on his background. But personally, the decision is made. I'm 100% confident that knowing his experience, based on his experience and background, and his integrity, combined with his strong governance structure of Norges Bank and the staff and the competence, no problem at all.
All right, thank you so much.
As well.
Yeah, we're trying to figure out, Governor, whether this is going to be a break for all. You know, I don't know what job is hardest, actually. What do you think is hardest, Governor? Is it, you know, being governor of the Norges Bank, or right now being head of NATO?
Well, I think to have a responsibility for inflation prospects is important. But there are things in life which could be more threatening than having, say, inflation numbers which are slightly below or above a target. So I think we're all more worried about the security situation than on the inflation prospects.
Thank you so much, as always, for all your interviews. Øystein Olsen, the Norges Bank governor, joining us this morning. Now let's get straight to the Bloomberg First Word News with Angel Feliciano. Hi, Angel.
Hey, Fran. The U.S. says that Russia is adding up to 7,000 troops to the 150,000 already near Ukraine's borders. That contrasts with an earlier claim by Moscow that it has begun pulling back some forces. Meanwhile, European Union leaders will discuss the situation at a meeting in Brussels today. Russia has denied any plans to invade its eastern neighbor. Germany is the latest European nation to unwind the virus restrictions that have disrupted life for 2 years. Chancellor Olaf Scholz says COVID curves will be rolled back in 3 stages by March 20th, starting with the immediate end of vaccine checks at non-essential stores. Switzerland, Austria, and the Netherlands have also announced plans to scrap restrictions. Hong Kong is considering testing its entire population for COVID. That's almost 8 million people next month. Local media reports say the government hopes to finish the program within 14 days with the help of medical workers from mainland China. The city is said to have seen another 5,000 confirmed cases today. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Fran.
Angel, I'm going to pick up from here. Thank you. Just an update on the Hong Kong story then. A line crossing the terminal, Hong Kong finding 6,300 prelim positive COVID cases. Within the context, of course, that is very significant for Hong Kong as they struggle with this outbreak. Okay, coming up, we speak to 91 CEO and founder Hendrik du Toit. That interview is next, managing more than 140 billion US dollars AUM. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the Open. We are 43 minutes into your European trading day. Your range brand across the benchmark stocks 600 future stateside pointing to losses between 0.5 and 0.7%. But there's been a move again to havens. You're seeing this quite pronounced across gold, certainly a bid for gold again, up close to 1%. But you're also seeing the yen has strengthened as well, and demand for treasuries continues. So that safe haven move on the geopolitics, of course, as investors continue to work through the FOMC statement. But it's the geopolitics that seems to be driving these safe haven moves. Francine.
Yeah, no, it's already a lousy year for the traditional 60-40 portfolio. 2022 was so far the 5th worst year for it, going back to 1973, an era of elevated inflation with a starting point of a richly valued stock market. Sound familiar? Well, so how should investors be allocating their money in today's world of soaring inflation? Well, joining us now is Hendrik du Toit, 91 chief executive, has a lot of money under management. Thank you so much for joining us, Hendrik. I mean, the problem is that actually, I guess 2022 is a year where asset managers either do well or do really badly. So is this where, asset managers earn their money?
Francine, good morning. Of course, when markets are all over the place, that's when you earn your money, but not necessarily in the quarter or the month that you are discussing. This is a long game. And if you have to look through the noise, I would say right now there's a huge amount of geopolitical noise. The action is in the Fed meetings and in the interest rate market. That's what's really going to determine, and of course the inflation outcomes. So that's what occupies us. Because had we been completely occupied or preoccupied with COVID in March 2020, we would have had a very low risk portfolio and missed all the returns that were to be had and actually have been achieved by investors over the last sort of 18 months.
What are your clients saying to you? I mean, you saw very significant inflows last year. You got more than 140 billion AUM. Maybe you can give us an update on the AUM. Do you still see strong flows for 2022? And what are your clients saying to you about their concerns and where they want to be positioning?
I mean, typically, we're an institutional business. Our clients are pretty long-term, and therefore what they would be considering is how much should remain in the US after the excellent performance of US markets. I think there's a tech rotation going on. There are sort of bigger issues. So one of the area, and they typically know that you have to assume risk in inflationary times. I mean, the worst thing you can do with escalating inflation is hide for too long in cash. You can hide tactically in cash, but staying too long is a losing trade. So risk, the debate is what kind of risk should we take right now? And that's a very lively debate.
And the answer is, what worries a lot of, I guess, market participants is that there's absolutely no consensus also where we are in the economic cycle. So if you have no consensus on that, and you speak to economists and they go, they range from here to here, then how do you make that decision?
So what we firstly do, we look at probabilities. But where we really are emphasizing, or we as a house are emphasizing, or the area we're emphasizing is quality equities. So businesses that can withstand massive geopolitical risks, changes in systems, and are not dependent on credit markets. I mean, credit markets are, that's probably the place where most risk is right now. Starting obviously with the Chinese property issue of a year, or, that unfolded over the last year. But there's also been very loose allocation of credit across the world, if you just look at the debt story. So you've got to be sure when you take capital risk that whatever you invest in is going to be there after you've had unforeseen changes. And then the next debate is, by how much is inflation going to or how long is inflation going to remain? No one knows. All we know is that central bankers were behind the curve, and they're trying to catch up.
They're trying to catch up. We're seeing that, certainly. Where does that take you? Which sectors? You want to see that value, you want to see that strength, you want to see that lack of reliance on the credit markets. Which sectors does that take you to at this point?
Dependent on horizon. I mean, the really big value opportunities are starting to emerge, but that will take long horizon. I mean, if you look, how much can the tech sector derate? No one knows. There's still space, but there are going to be great opportunities to be had. So if you want a slightly more stable portfolio, you want to sleep better at night, of course, what we call quality equities are, is the place to be because they're also cheaper. And I would personally advocate spreading your portfolio more globally.
Hendrik, I don't know whether this is a fun or actually a depressing charge, but Valerie made it for me, and it comes from Garfield Reynolds and Safe Havens, new and old. So these are the new and old havens, and we're looking at gold, the standout, versus Bitcoin and treasuries. What do you do with Bitcoin? I mean, how often do your clients ask you about Bitcoin?
No, I mean, we simply have a very simple rule around crypto. Crypto is a very exciting new ecosystem. Some people may want to participate, but it's akin to modern art. We don't know how to value it. We have no expertise. We will not charge a fee to someone, and we can't give advice.
So, Hendrik, what's your favorite haven?
Gold is the favorite haven. If you really want U.S. Treasury and gold are the near-term havens. Longer term, you must stay out of fixed income markets because they are just going to go the wrong way. And so if inflation is high, gold is the haven.
All right, well, certainly getting a bid on these geopolitical concerns, currently up 0.9%. Very pleased to say Hendrik de Choit, 91 CEO, going to stay with us. We get more calls after the break then. Coming up, we're going to hear billionaire activist investor Carl Icahn, his views on surging inflation, talking of that debate. That is next. This is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Sooner or later, a situation like this is going to end relatively badly. Some less badly, some more. But you can't keep printing up money and printing it up and printing it up because you get what you have now that you can't control. The government can't control inflation.
Billionaire activist investor Carl Icahn, of course, giving Bloomberg his thoughts on the risks around inflation. Henrik Detroit, 91 CEO, is still with us. Let's talk about inflation. You touched on this before the break, the implications for the Fed, the markets, some pricing in up to 7 hikes. I want to see what the read-through is for EM, an area of expertise for you and the team at 91. Is there a risk? How vulnerable is EM to that kind of move from the Fed?
I mean, of course, when you get dollar strength, buoyed by expectations of rising interest rates, there will be implications for EMs. Now, some EMs have been, like I dare say Russia, have been well ahead of the curve, raising their rates, fortifying their balance sheets, and they will come through quite well. Whereas the weaker EMs and the energy-dependent EMs, because remember, when the energy transition happens, places like India will be massive winners. The energy transition hasn't quite happened. And when you have to bring in oil at near $100 or around $100 a barrel, it does affect your external balances as well. So I think we're going to see some pain. We're going to see some bifurcation in performances. But the resilience of EMs, as we've seen through COVID, is actually quite remarkable. And if you look at the debt markets over the last 10 years or so, they've done pretty well. Equities, people say EMs have done badly. Actually, Europeans have also done badly because it was a US game. Yeah. So I think we need to look at individual issues and individual countries. Sorry.
The biggest issue at play right now is inflation. And you've said a couple of times that you think central banks are behind the curve. But what makes you so convinced that actually they are? Because if this is a supply issue and we're going to see an easing of that, right, then it could be resolved quite quickly. And then we could see a reversal where we'll see cuts.
I can give you an economist answer, but I'll give you a practical business answer. All the CEOs we speak to, maybe they're using it, but they're talking about inflationary pressures. They're also pushing through where they can price increases. And in the labor market, I mean, what we've seen, for example, just in our world, in terms of finding people, particularly at the low-skilled end, is a real problem. The US is definitely no better, which should be because the economy is doing quite well and it's kind of a better balance than the rest of the world. So my sense is there are real inflationary pressures which have built up by massive stimulation. And probably if you take Biden on top of Trump, Trump had already stimulated massively, and then the Biden package came on top. And of course we've got the issues on real estate in Asia. So I think there may have been slight overstimulation, excessive fear for what COVID would have meant, and that may leave pressures in. But, that's the practical business answer. The economist answer will be wait for the Fed here, see the data, etc.
Where we're not seeing inflationary pressures is China. Is China a diversifier for your clients?
Well, we do believe that China is a huge diversifier. We are confident that the Chinese economy will come through the current difficulties, but they have difficulties. We are not expecting the kind of growth rates that people have been forecasting a year or two ago. But within that, there are fantastic assets to be had and to be bought at reasonable prices. So we see China as a diversifier, and Asia, as a whole, is an important part of a portfolio. And that's why I started earlier on by saying global is probably going to be the game rather than just single, because you need to manage the risks across your portfolio.
Thank you so much for joining us. Henrik Detroit there, 91 Chief Executive, joining us, of course, on inflation and some of the value propositions out there in the markets.
That is it for the European Market Open. A surveillance early edition is up next. Your markets in Europe currently down by about 0.1%. Futures US side pointing lower. Stay with us. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
We have to see with our own eyes what's happening, not just listen what's happening, because it's always or mostly disinformation.
I regret to say that this is the new normal in Europe.
Sooner or later, a situation like this is going to end relatively badly.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The U.S. says Russia is adding troops along the Ukraine border, rejecting claims of a pullback. The Kremlin denies the accusations. Fed minutes, while the FOMC reiterates a probable March hike, but questions remain if it will be a bumper 50 basis points. And stay with Bloomberg Surveillance Early Edition. This hour we discuss activist investments with Amber Capital Joseph Ougourian. We also speak to the chief executive of the world's largest food company. That's Nestlé's Mark Schneider. Send in your questions on IB plus TV Go. Now to the markets, and it has been a pretty wild ride this week. For the moment, we're seeing a bit of support. I mean, I say a bit of support, but actually we are seeing a bit of a reversal in the last 5 to 10 minutes on the European stocks 600, pretty much flat. Now the U.S. 10-year yield, again, it's a surprise, certainly for the younger people in the trading floor to see that U.S. 10-year yield at 2%. This has implications of, well, for the dollar and therefore for emerging markets. You can see NYMEX at 92.55. Our big take, it's a great read looking at the volatility and the whipsawing that we saw in oil markets over the last 2 years. Remember, we were at sub-zero in 2020. Now we're close to 100. And the big story there today, we're seeing down 1.2%, is whether we get a nuclear accord with Iran. That would mean extra barrels of oil on the market. And then gold, 1,886. Now this brings us to the best chart of the day, which encapsulates some of the fear in the markets. And this is a theme that we've been talking about quite a lot. The market trying to figure out that tightening from the Fed, if they've overpriced tightening, if we get a 50 basis points move from the Fed or the Bank of England, at the same time looking at Ukraine. So what it means is that we're seeing havens, of course, move into, and one of the best charts that our Valerie put our attention to, which comes from Garfield Reynolds, is basically these safe havens, new and old. So you see Bitcoin, and you can see the volatility with Bitcoin, but also the Treasury Index, which is the blue line, and then you have gold in white. We've spoken to 4 or 5 portfolio managers just this morning saying like gold still is quite attractive, and you can see the difference between the way gold is going compared to, for example, Treasury Index or Bitcoin. Now, the other things that we need to really watch out for some of the corporates, because on a day like today, where investors try to figure out what the main story is, it's individual stocks that will give us an impetus on where the markets want to go into. And we see, for example, Nestle down 0.1%, Kering with a pricing power. Gucci, really the cash cow for Kering, being able to increase prices. Also more focus on Gucci, thanks to the film House of Gucci. And then Reckitt Benckiser are also coming with some pretty good forecast, getting some 4.5%. On to geopolitics now. The U.S. says Russia is adding troops along the Ukraine border, rejecting Moscow's claims of a pullback. Now let's get the latest on the Russia-Ukraine tensions with Bloomberg's Maria Tadeo in Brussels, where, Maria, European leaders are holding an informal meeting this morning. So, I mean, who do we believe? How do we verify? And what do we know Putin's intentions really are?
Well, Francine, that is really the big question this morning here. Who do we trust and where is this information coming from? Now, the Russians say that they are pulling back, and they're pulling back at these troops. They also said, by the way, yesterday, taking a dig at the European forces and the U.S., suggesting that February 16th, this was supposed to be the big day of the Russian invasion. It didn't happen. This is a huge propaganda war that the West is doing. Now, the flip side to this, Francine, is NATO saying the reality is we're not seeing the forces move back. We're not going to just believe blindly a video released by the Russians. And by the way, we have detected every threat and misinformation. So NATO is really doubling down on this idea that the threat from Russia is not going away. Also, Francine, just very quickly, European leaders are meeting here in about 3 hours. The focus point will be financial help for Ukraine, but also detailing now a list of sanctions for Russia.
Maria, thanks so much for the great roundup. Bloomberg Europe correspondent Maria today on some of the geopolitics there. Now joining us to look into the markets and to unpack the FOMC minutes, Bloomberg's news markets editor, Christina Kino, and also we're welcoming the director of research at Global ETFs, Morgan Deledon. Thank you so much for joining us both. Christine, first of all, the minutes. So the market is kind of thinking, okay, we have the minutes. I know you have some great analysis on, some of the mortgages compared to some of the treasury markets, but overall, because we had that big inflation print and we also had that big GDP print, I don't know how indicative they are.
Yeah, Francine, it is a little bit behind the curve, isn't it? Because this was before all of the blowout data that we've seen since the Fed's January meeting. But I think it still informs us in a way because it really tells us that the Federal Reserve Committee members are primed to hike more and faster at the onset, even before they had that CPI data that was really off the charts. And so now that we know that this is kind of the way that they're thinking about this heading into the March meeting, and then combine that with the CPI data, I think it really does drive home the point that investors should be ready for the possibility of a supersized rate hike in March and perhaps in the subsequent Fed meetings.
So, Morgan, are you pricing in, or are you expecting a 50 basis point, hike from the Fed, or did the markets maybe get ahead of themselves?
Well, very good question, Francine. I think actually it's a high possibility that the Fed could go for 50 basis points, and the reason being that, we tend to believe that as supply chain disruptions resolve probably in the next 6 to 9 months, and as we see also base effect in headline inflation winding down in the second half of the year, inflation outlook should stabilize. Therefore, the window for increasing interest rates is becoming tighter, narrower, and therefore the next 6 months are going to be critical for the Fed to increase interest rates before the next business cycle.
What is a policy mistake? Thank you so much. When we look at the policy mistake, Christine, where could we see it most? And we have a great chart also looking at UK gilts. We have that huge inflation print here in the UK, but it seems that the market got so ahead of themselves, actually gilts moved the other way.
Exactly, Francine. And I was really interested to note that that is quite the divergence from the reaction in the US when we got a similarly blowout inflation figure just a couple of weeks ago, right? But in the UK, I think we really had that process of ramping up those rate bets much earlier than we saw in the US. I mean, this was something that we were talking about, I think, in 4Q of last year. And so there is this feeling that the UK market is getting ahead of itself quite a bit.
Christine, let me bring you to that chart, because actually it's a great chart that our Kadmar just put together and just goes to the tensions of the markets always always front running almost what the central banks are trying to do.
Absolutely. And markets, we know markets overshoot, right? This is what they do by nature, and this is certainly something that we've seen in the UK, a story that has unfolded since the fourth quarter of last year, still going on now, heading into the March BOE meeting. So it makes a lot of sense for a little bit of pullback here.
So, Morgan, how do you play this? When you look at differentials, is it Fed versus ECB? Is it actually Bank of England, because it just seems to be leading the way?
I think at the moment what is interesting to see is that the market is pricing a very aggressive monetary policy stance in the Western world, and that includes the ECB. But actually, I think in Europe, the market is probably pricing in too much of interest rate hikes, because I think one key element for the ECB for its next decision would be to look at the spreads. And currently, the core versus peripheral spreads are wide, especially with Italy versus Germany, or Spain and Greece versus Germany. And also, if you look at the euro swap spreads, they are also quite wide. So all the financial conditions across Europe doesn't suggest that the ECB could hike very aggressively. And I think on top of all this financial consideration, the issue and the tensions over Ukraine is really endangering the inflation outlook.
Morgan, very quickly, are there reasons? Do you worry that actually central banks are hiking as growth is slowing down?
I think you mentioned the policy mistake earlier. I think it's tricky now, because if central banks have acted sooner when the supply disruption shock happened, they could have lowered down the demand curve and therefore kind of stabilize inflation outlook. Whereas now it's a bit too late. So it feels like central banks are playing catch up with inflation. But as I said before, I think that now that the demand has been stronger and the supply chain disruption are resolving and the supply chain curve is shifting up again, the risk is to dampen demand too much and the risk of turning into a recession. So very challenging time for central banks.
Yeah, extremely challenging times for markets, extremely challenging time for companies that have to deal with this inflation, Christine. And kind of earnings today gave us a sense of who can hike prices and who can't.
Absolutely, Francine. And there really is this divergence now between some of these companies that are very inflation vulnerable, right? These consumer product sort of companies like Nestle, definitely feeling the pain of that. Meanwhile, luxury companies such as Kering, very much enjoying this pricing power that they're wielding over markets. And I think this is going to be the corporate story moving forward. It's that divergence between inflation vulnerable companies and inflation proof companies.
Thank you both for joining us. Our Bloomberg Markets editor, Christina Kino, and a Global X ETFs Director of Research, Morgan Belladonna. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we have a top lineup of guests. Later in the program, we discuss activist investment with Amber Capital Joseph Ougorian. We also speak to the chief executive of the world's largest food company, Nestlé's Mark Schneider. So you can send in your questions on IB Plus TV Go. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when We're going to 2 nanometers and below into the angstrom era, so it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
The government can't control inflation.
The Fed is being dictated by inflation.
Are they intent on dealing with that?
There really wasn't too much clarity.
It doesn't end happily.
They're only going to do it if the market allows them to.
If we're in an inflationary environment, holding on to cash is almost giving up and losing the game.
They seem to want to find one that's going to make inflation come down, the stock market go up, and everybody's happy.
I'm not predicting that we're in a bear market. I'm not predicting that this is going to end. Saw this euphoric atmosphere.
Bloomberg TV guests there weighing in on the FOMC minutes that showed Fed officials discussing accelerating the pace of tightening if inflation persists. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Germany is the latest European nation to unwind the virus restrictions that have disrupted life for 2 years. Chancellor Olaf Scholz says COVID curbs will be rolled back in 3 stages by the 20th of March, starting with the immediate end of vaccine checks at non-essential stores. Switzerland, Austria and the Netherlands have also announced plans to scrap restrictions. Now, Hong Kong is considering testing its entire population for COVID, almost 8 million people next month. Local media reports say the government hopes to finish the program within 14 days with the help of medical workers from mainland China. The city is said to have seen another 5,000 confirmed cases today. Nestlé is warning profitability may decline for a second year in 2022, showing that even the world's largest food company is not immune to rising cost inflation. CEO Mark Schneider says import costs will probably increase more this year than they did in 2021. Sales at the company, which makes Kit Kats, rose 7.5% on an organic basis last year, beating the 7% forecast by analysts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, I don't know whether there's a breaking point where I won't eat chocolate, but I'm eating so much chocolate. Please just put the prices up, even like 500%.
So I've got a vegan Kit Kat now, which I've never tasted, and I've got to source one out in the supermarket soon.
Okay, let's do vegan. I think they have a pink one and also a green one, a matcha one, and then we'll do a taste test for Kit Kats.
And we can put it on TikTok.
There you go.
Twitter.
Because we're young and cool. Thank you so much, Leanne. Smart Conversations continue on Bloomberg Surveillance Early Edition. We have some great guests. Later this hour, we speak to the chief executive of the world's largest food company, Nestlé, Mark Schneider. It's not only a conversation about chocolate and Nestlé, but coming up, we discuss activist investment with Amber Capital's Joseph Ougurian. Send in your questions on IB plus TV Go. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Amber Capital, the European activist hedge fund, has a track record for being contrarian in the region. Last year, Amber sold out its shares in the French media group Lagardère. Amber's chief executive and founder, Joseph Ougourian, is now directing his activism at the Spanish media group Prisa. Well, he joins us now, and I'm delighted to have him here in person in the studio with me because it's been way too long. Joseph, thank you so much for joining us. So first of all, in terms of shareholder activism, I don't know whether it will pick up in Europe because you're starting to do it like it does in the US. We've seen it with Unilever, a number of companies, but also you're changing the way that you're seeing it and how you want to be invested in.
Sure. Well, thanks for having me, Francine. It's good to be here after a few years. I think that there's going to be more and more activism because, and Unilever is case in point, but there's other cases in Europe. You know, a number of big companies have sort of ignored governance, have not sort of looked at best interest of their shareholders, have sometimes used ESG as an excuse not to do the right thing for the shareholders. And so you're going to see more and more of that. It's a growing trend. It's a growing trend just as, passive investing has been a growing trend for the last 15 years. Yeah. It almost goes in sync with passive investing because passive investing doesn't look at really, truth be told, at ESG and governance in particular, whereas active investing obviously pays a lot more attention to that.
So, but do you have to have ideals, or do you have to just want to make money?
Well, both. I mean, I think that going after a company just with the idea that, you have to maximize shareholder returns in Europe in particular is not good enough. No. I think you have to have this sort of ESG angle, particularly strong focus on governance, which sometimes, where things leave to be desired. And there's a lot to be improved still in Europe.
So I know you set your sights on media at the moment. A lot of newspapers, especially in Spain. I mean, this is, I guess, one of the biggest transformations, or media in general will be disrupted even more from now. So what are you hoping to achieve?
Well, media, the feeling is that all media is dead. And this is really a reflection of what's been going on for the last 15 years in the market, where you've had a complete sort of major breakup between value and growth. And so growth companies are trading on multiples that, people can't sort of even figure out the multiples. They have to look at turnover because, they've had to leave PEs and EV/EBITDA and all of that stuff. And value stocks have been decimated. And what I think you've seen over the last really 2 months is a slight readjustment of that. And I think there's a lot more to go. because over time it's proven that value actually outperforms growth. So when you look at the, sort of the starting point where we are right now, I think there's going to be a lot more to go for value. And in some ways that discrepancy between old media and new media, it's reflective of that value and growth. And what you're seeing...
Does it get readjusted, Joseph, because of actually, because of what central banks will do? And also, just FYI, we're trying to get the show on the metaverse, so, we will go strong.
Well, central banks and long-term interest rates in general, that movement towards sort of having positive nominal interest rates in Europe certainly has, great impact on valuations and certainly had great impacts on financial markets. I think it's a good thing.
Yep.
It's a good thing because, we're going back to a more normal environment where, money becomes costly, where, if you've got a deposit on your bank account, you actually get something for it. You don't get debited for it. If you go and borrow money from a bank, they actually charge you something for it.
Yeah, and also not everyone can make money in the stock market like we've seen, and this will probably be a wake-up call for some of the younger traders out there. But what does it mean for you? Does it mean that you can actually invest in companies on the cheap side to get changed? And is there anything that is there an industry group that you're targeting? I know you like financials.
We like financials. I think that European stock markets, by and large, because they're very much populated by value stocks, they're still very cheap.
Okay.
They're still very cheap, whether you look at them on multiples, whether you look at them versus interest rates, whatever metrics you take. Earnings are incredibly strong. I mean, I was watching the headlines, waiting for you, and seeing all these companies reporting. Kering this morning, Orange yesterday,
5%,
all the oil companies, the financials. Yeah, they're all very, very strong earnings. And so what that shows is actually a bit of inflation is a good thing for companies. It's not, always that, costs are going up and they can't, pass that on to the consumer. In a lot of cases, they're able to do that.
But for example, when you look at financial companies, I mean, we've been talking, for the last 2 decades about some kind of consolidation in Europe because we're overbanked. Will it happen? Like, how do you play financials in Europe?
Well, financials are interesting because, for the first time you have a curve. And so, for the first time in a long time, they're able to make money on, their core business, which is, net interest income. And that's a game changer for banks. That's a game changer for a lot of insurers as well, life insurers, which were having a tough time sort of offering good products, to their policy holders. And P&C guys, that need to reinvest the money they make from, their insurance business.
Joseph, thank you so much. And of course, valuations of banks are pretty incredible. Joseph Ougorian, Chief Executive and founder of Amber Capital, stays with us. We'll also talk about oil and then a conversation with the Nestle Chief Executive. I'm looking forward to that as well. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The U.S. says Russia is adding troops along the Ukraine border, rejecting claims of a pullback. The Kremlin denies all accusations. Fed minutes, the FOMC reiterates a probable March hike, but questions remain if it will be a bumper 50 basis points. And stay with Bloomberg Surveillance Early Edition. This hour we speak to the chief executive of the world's largest food company, Nestlé's Mark Schneider. Up next, we continue our conversation with Ember Capital's Joseph Ougourlian. Send in your questions on IB plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Quite a lot going on when it comes to the markets, but actually havens are really getting a bid, again, as a market trying to figure out the Ukrainian risk. Now, there was a bit of uneasiness yesterday when a lot of the leaders, including NATO and, of course, the U.S., said they don't 100% believe what the Russian Foreign Ministry is saying. The Russian Foreign Ministry now denying a claim by the U.S. and Britain that it's added as many as 7,000 troops to what President Biden has said are around 150 soldiers already near the border. So as we figure that out, gold gaining some 1.2% at 1,893. Some of the other movers that we're talking about, Reckitt Benckiser jumping after forecasting profit margin growth, gaining after Gucci sales surged past pre-pandemic levels, and Nestlé actually dropping after warning profitability may decline for a second year. Now, the two-year COVID crisis put many markets on a wild ride, but few have been crazier, frankly, than crude oil, from total collapse in 2020 to the brink of $100 a barrel. Today's Bloomberg Big Take looks at the story so far and where we might go from here. Well, joining us now is Bloomberg's European oil editor, James Harron. James, what happens? So first of all, what happens when we touch 100? I know in certain parts of the markets we've already done so. Is there a level after that?
How far it can go from here depends on a couple of things, really. One is supply. Can there be an increase in production? We're seeing a rise in U.S. shale output, but nothing like we saw in the boom years. And it looks like OPEC is struggling to boost its production. And the second question is demand. Growth has been really strong right now, but obviously as prices get higher and with inflation all across the economy, if prices were to go above 100 and keep going, the question would then be, at what point do we see consumers pull back their spending, drive less, for example, stop flying to places? You know, that the demand destruction level would be the next thing we'd be looking at.
So, James, what's your take? I mean, there are a number of things, and it's actually pretty incredible, the wild ride that we saw with the price of oil over the last 2 years, sub-zero, now at 100. We're watching out for Iran, whether there's extra barrels coming from there. I keep on hearing that it's only Saudi Arabia that actually has the capacity to add more oil to the market, so it's really up to them to decide what they do. And then investments in the industry is also something that, you know, we could have underinvested quite significantly.
Yeah, that's very true. Really, Saudi Arabia and also perhaps its neighbor, the United Arab Emirates, are the only ones that really have idle capacity that could be switched on at fairly short notice. Now, OPEC, as I said, a lot of other OPEC members are struggling to hit their production targets, but so far the Saudis haven't shown any willingness to fill that gap. And while U.S. production is rising, that's more of a gradual thing. And obviously the U.S. producers aren't holding spare capacity, the kind of thing that could be switched on in an emergency if there were to be a big disruption due to some geopolitical instability.
James, thank you so much. Bloomberg's European oil editor, James Heron. Now, remember, you can read The Big Take in full on Bloomberg.com and on NI Big Take Go. I'll also push it out on social media. Now, as global equity markets come under pressure from the prospect of aggressive central bank rate hikes to curb inflation, many investors are changing their risk exposure. Amber Capital is still bullish on the European economy and stock markets. The chief executive and founder, Joseph Ougourian, now favors value sectors such as Italian banks, telecoms, and utilities. So, Joseph, thank you so much for staying with us. I mean, I find it extremely difficult, actually, to see a narrative that's consistent. And we had a good conversation, robust conversation also with the PP chief executive, is that the dividends and the returns in the oil sector are so huge. But how do you deal with this, also a transition? If we wean ourselves off, off oil, is there another commodity that you want to be invested in that will make up for it?
Well, that's a great question. I mean, I think one of the problems is the oil industry and the energy industry in general is getting starved, capital starved, because of ESG concerns, because of all the issues surrounding it. And that in itself, creates a problem in supply. And I'm not sure that, Saudi Arabia or Russia are able to sort of, turn on the taps and that quickly because, the capex cycle in the oil industry is such that, it takes a year or two between the time you sort of switched on, or switch back on your capex cycle and the time, you get to production. So that's an issue. Now, for us as investors, we love oil stocks as value investors. It's a bit more complicated when it comes to ESG, and the real question we have, we're faced with is, are they like coal stocks 10 or 15 years ago? And you're looking at fantastic cash flows in the next 2-3 years, but eventually they will go away and they'll be sort of left with environmental issues.
So how do you handle that?
Exactly. So what we're doing is sort of looking at other energy-related names that we think have interesting, same value characteristics, but they're actually more exciting, and they have, more interesting energy stories.
So what do you like?
We love NG.
Okay.
We love NG. I mean, that's a stock that's completely undervalued. It's been left behind with the utilities over the last few years. It starts to do well this year, but it's still on 6 times EBITDA, on 10 times PE. It's got the 3rd largest renewable company inside NG. It's sort of, hidden inside this sort of big conglomerate, but it's got a new governance. It's got a new chairman, for the last 3 years. New CEO. The results yesterday show that they're starting to have an impact on the way the company is managed. They've divested a number of divisions that were sort of were not core, and hopefully the market will see the value that there is. I mean, EDPR reported stunning results, and there's an EDPR inside NG.
Yeah, because it's inside. I mean, would you spin it off? Is this, and we've seen a number of spin-offs. I mean, I'm thinking of, either some of the asset managers in Germany or even some of the, the truck makers for some of the Swedish companies. But do you have to unlock value, but actually, telling exactly what you're looking at to investors?
Well, I think, it's certainly a question that the management will have to ask itself, and that's certainly a question you should ask them. Yep. But I think that when you've got that much value sort of hidden inside your company, you've got to do something about this, because when people think NG, they think the networks, they think the energy generation, they think of a lot of things, and it's not very clear what NG is all about. When you look at what NL and Iberdrola have done, that are trading on much higher multiples.
Because they started earlier.
Because they started earlier, exactly. They sort of had that transition towards more renewables and more networks already 10, 15 years ago. So NG's late to the game, but it's also a lot more interesting from a valuation standpoint.
Yeah, it's cheaper. Is there anything else like that in Europe that you like? I don't know whether, what do you do with UK assets? So we're in Brexit, we're in Brexit Britain.
Yeah, we are, but the UK stock market will do well.
Yeah.
Just because it has this tilt towards value. I mean, it's got lots of resources, it's got lots of oil companies, it's got lots of consumer goods companies. So there's a lot of stocks that are interesting in the UK. We think continental Europe, and particularly, you know, countries like France, Spain, Italy, will benefit, you know, asymmetrically from what's going on with the new transition plan and the new incentives that will go to the Spanish and the Italian economy, or Greece, you know, for that matter. I mean, that's 10% of their GDP. So while everyone's worried about, you know, world growth, and is inflation and central banks, you know, are they going to stifle growth? I mean, you have in Southern Europe a safe haven where, you know, a lot of money is going into those economies.
Yeah, but the problem is that if the ECB stops buying bonds, then frankly, people may freak out a little bit, right? Is there a danger that we go back into crisis mode when the ECB says, actually, I'm not going to buy those Italian bonds anymore?
I can't see that happening, Francine. I mean, you know, we've been there, done that. We've had a lost decade in Europe. You look at, you know, what European stock markets have done versus the US. It's been a disaster.
Even politics, you think it'll be stable? Because I look at, and again, this is a bit away from the markets, but I look at Gucci, owned by Kering, being able to raise prices considerably, and then I look at Nestle not being able to do so. That creates inequality and resentment, and that will, of course, impact societies.
Well, you know, the issue with inequality is a wider issue. It's not just a European issue. Actually, Europe, from a Gini coefficient standpoint, fares a lot better than the US or Latin America, for that matter. But I think what you're saying about Gucci is that, you know, that's the reason, you know, billionaires like Mr. Pinault, Mr. Arnault have invested in the luxury goods sector. It's pricing power. Now, we forgot about that, you know, because when you go through a disinflation or deflation period, forget about pricing. Now, you know, we're seeing the companies are able to pass on prices, and those that are not. And you'd rather be with the first group.
Joseph, we're out of time, but actually indulge me. You haven't been tempted by NFTs or metaverse or crypto worlds?
No, not at all. Not at all. Well, I find so much value in the names that we trade in. You know, I focus on cash flow.
Okay. All right. Thank you so much, Joseph Gourian, their Chief Executive Officer and founder of Amber Capital, with a really interesting conversation. Now, it's a conversation, of course, about value stocks, about inflation, about the trajectory for hikes, the Fed, the BOE, but also ECB. And then the other story is geopolitics. Mr. Lavrov, Foreign Minister of Russia, saying that Russia is sending a response to the U.S. on security today. They've certainly traded as not even barbed wires, just really wires saying, you're wrong, I'm right, we're pulling out, with the U.S. and NATO saying we haven't been able to verify it. Mr. Lavrov saying that Russia will make its response on security public. So I don't know whether it also means that the markets will move on the back of it. In the past, they have made responses that have not been believed. So let's see if this time it's any different. Coming up, the price of your Kit Kat and morning Nespresso may be going up. We speak to the Nestle Chief Executive, Mark Schneider. That's coming up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
From New York City. When you're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
story. How are you thinking about those dynamics?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're just getting live pictures out of Russia with Mr. Lavrov meeting with Mr. Di Maio of Italy. Now, we know that they discussed Ukraine. It's interesting to see a lot of world leaders, a lot of foreign ministers, I feel like every day showing up at the doorstep of the Kremlin to try and de-escalate the situation with Ukraine. Mr. Lavrov saying that they will send a response today, a formal response to the U.S. on security. We'll continue monitoring, of course, that conversation between Mr. Lavrov and Mr. Di Maio to see if we have any breaking news on what's happening in Ukraine. Now, onto corporate stories. And Nestlé is warning profitability may decline for a second year in 2022, showing that even the world's largest food company is not immune to rising cost inflation. The Swiss firm says input costs will probably increase more this year than they did in 2021. Total sales at Nestlé rose 7.5% on an organic basis last year, and that's the fastest pace in 13 years. Well, I'm very pleased now to be joined by the Nestlé Chief Executive, Mark Schneider. Mark, always great to speak to you, so thank you so much for coming on. It's a very difficult situation that you have to deal with. If you look at, for example, a unit like Espresso or Nespresso, how much are higher prices and inflationary pressures hurting you there? When are you expecting it to get easier?
Yeah, thanks, Francine. Glad to be back. And look, let's start with the strength of 21, because as you said, the growth was phenomenal. And we had warned all throughout the year that with rising input costs, there was going to be a slight dampening effect on operating margins. It's very minute. And so at the end of the day, I think we managed it well because we prepared for it early. We had a good hedging strategy. And also we saw lots of internal operating efficiencies. Now, having said that, looking at 22, inflationary pressures continue to rise. And so it's a safe bet that inflation will hit us harder in 22 than in 21. All of the internal work continues, but we also have to resort to responsible pricing. Pricing is easier at the premium end of a segment. So think about Nespresso that you mentioned, than at the value end of a segment. But overall, I think across the board, we will have to do responsible pricing in order to offset inflation. And I think that's well understood by retail partners and consumers.
So, Mark, talk to me a little bit. First of all, we have a chart that really, brings it home, this inflationary pressure across the world. And this is a UN World Food Price Index, which we put together that really shows it going higher versus their 2011 peak. When you look at that and you say that actually there's almost, no place in the company that's exempt from inflation, where do you expect it to be easier? Or when do you expect to be easier? 15 months, 18 months, will it get easier in terms of these pressures?
Yeah, look, it was always clear that at the turning point, when inflation starts to hit, there was going to be a time lag on whatever pricing you're able to do because there's contractual arrangements with retailers. You can't just jack up prices the next day. We had warned about that, and this is exactly how it came about. And at some point then, one of two things is going to happen. Either we settle into a regular inflationary cycle, and in that case, you can adjust your pricing more proactively, and then that compression on the margin should end. Or it turns out within a year's time or so that this inflation of 21 and 22, in hindsight, was only a blip. And in that case, the margin pressure should also ease. So midterm, we continue to be optimistic when it comes to our operating margin. This is what we underlined in our midterm outlook today, where we expect a full return to the Nestlé model of moderately improving operating margins. It's just for 21-22, there was no escaping from that temporary compression.
Mark Schneider, give me a sense of where exactly you're hoping to be able to raise prices without hurting demand the most. So I know you're looking at moderate increases, but for example, going back to Nespresso, it's, I guess, by legacy, always been kind of protected by any price increases. Can it go 4% higher, 5%, or double digits in terms of price hikes?
Yeah. So we generally stay away from pinpointing specific products or brands and geographies here from the center. So the general statement is that on the more premium side of things, it's easier to do. Clearly, when you have a direct-to-consumer model, it's also easier to do that because whenever you have retail partners, of course, you have to sit down for negotiation and you have to wait till the next reset date. But I think the inflationary pressures are such that across the board, you will have to take moderate increases and responsible increases. We are particularly responsible in our pricing activities in emerging markets because there we know that, of course, the ability to pay is also very much governed by disposable incomes and daily cash incomes.
I know, Mark, that your ice cream joint venture with Froneri is doing very well. Any plans to IPO that?
So this is a wonderful joint venture that we started in 2016. We enlarged on it in 2020 by adding the U.S. business. And so going forward, it gives us full optionality, but we have not disclosed any specific plans yet. But the business is just doing absolutely wonderfully.
I mean, any plans to buy anything? I know you have said in the past that you were possibly looking at acquiring companies once you got rid of some of the things that you wanted to get rid of, some of the disposals that have been announced. So are you ready to buy? And if yes, does inflation make it easier or harder?
Yeah, so we have given a portfolio update today. When you look back over the last 5 years, we've done 85 transactions. We swapped out about 20% of our revenue base and traded up towards higher growth, more on-trend categories and brands. So I think both on the buying and selling front, we've been really, really active, and we continue to be very interested in adjusting our portfolio through buying and selling. So there's no change from the past. We're open across the full spectrum of our activities, and it all depends on strategic fit, cultural fit, and of course, the right price.
Okay, so there's nothing, Mark, to say that actually at the moment some of the valuations are expensive. There's nothing like that.
Well, I think we benefited from high valuations in past years when we had our divestiture activities. I think insisting on full value when you divest, to me, this is part of value preservation. And we've been quite targeted when it comes to the acquisition activity. So take our acquisition of the Bountiful company in the vitamins, minerals, and supplement space last year. In addition to the strategic fit, I think we were widely applauded for the financial discipline there in a very reasonable multiple.
All right, thank you so much, Mark Schneider. You'll have to come back and we talk a lot more about vitamins and how some of our tastes have also changed during the pandemic. Great pleasure to speak to the chief executive of Nestle. Now, coming up, we'll have plenty more, of course, on some of the pricing pressure, some of the pricing powers that's underpinning everything we do on the markets. Also, coming up, the Airbus chief executive, Guillaume Faury, a conversation you don't want to miss. This is Bloomberg.
Has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's get straight to your Bloomberg Business Flash with Leanne Gerrans. Hi, Leanne.
Hi, Francine. Amazon is settling a feud with Visa that had threatened to hammer the financial company's bottom line and disrupt e-commerce payments. The online giant says it will not remove Visa credit cards from its UK site and will no longer levy a fee to customers using Visa cards in Singapore and Australia. Amazon had been unhappy at the charges made by payment processors. Across the industry, those amounted to $110 billion in 2020. Now, activist investor Cole Icahn says the U.S. government and the Fed cannot keep printing money. He told Bloomberg Television he cannot predict when a bear market will happen because there are too many variables. The billionaire Wall Street veteran also sounded a pessimistic note on price pressures in the U.S. economy.
Sooner or later, a situation like this is going to end relatively badly. Some less badly, some more. But you can't keep printing up money and printing it up and printing it up because you get what you have now that you can't control. The government can't control inflation.
And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Full focus, of course, on the hiking cycle from the Fed and other central banks, and that's really giving an impetus to markets as they also try to figure out the flurry of corporate earnings that we had. Nestle dropping after warning profitability may decline for a second year. Also, Reckitt Benckiser jumping after forecasting profit margin growth. Now, overall, traders weighing geopolitical developments in Ukraine, Russia's foreign ministry denying a claim by the U.S., and Britain that it added as many as 7,000 troops to what President Biden has said are around 150,000 soldiers already near Ukraine's borders. Now, a couple of things we need to watch out for. Amazon agreeing to accept Visa's cards across its global network. That's quite interesting. And then we had Loretta Mester. We have James Bullard speaking today. Tomorrow, we also have Charles Evans, Christopher Whaler, and Lael Brainard. That's our Fed Watch. Bloomberg Surveillance Early Edition continues with Matt Miller, Katie Lyons, and Anna Edwards. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Right now, the allies are so united that I don't think there's any chance that Putin can move forward and not realize there's going to be a big, big problem for him.
We are, of course, ready to engage in dialogue with Russia to seek a political, diplomatic solution, but we're also prepared for the worst.
You've heard us say a number of times that that we're committed to Article 5, and so you can expect that that commitment will remain rock solid going forward.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Thursday, February 17th. Our top stories today. Russia and the West exchange accusations over Ukraine. The US and UK say Moscow has added up to 7,000 troops to the forces near the Ukrainian border. The Kremlin calls the claim fake. Oil's stunning recovery. Crude was in a total collapse in 2020. Now it's on the brink of $100 a barrel. We have the backstory. And more details coming out about that US investigation into how Morgan Stanley handles block trades. Bloomberg's learned that authorities are examining recordings of phone calls between the bank and outside fund managers. It's a busy morning. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lines in New York. And Kayleigh, European equity markets a little skittish this morning, finding it difficult to shake off those geopolitical concerns.
Yeah, that seems to be the story of each and every day, Anna. Every morning feels like a busy morning, and Asia also struggled with this as well. It really was a mixed session depending on which region you were, or regional benchmark you were looking at. The MSCI Asia Pacific Index as a whole was relatively unchanged, only up about 0.1% as you had stocks higher in places like Hong Kong and China, but actually lower in Japan. That may have, in part, something to do with the strength of the Japanese yen, which is catching a real safe haven bid today. It's stronger against the US dollar by about 0.4%. 115.09 is where we sit. Also interesting in terms of Japanese assets is the bond market, specifically the longer end of the curve. You saw the 30-year yield moving up 5 basis points today, nearing 1%. 99 basis points is where we sit at the moment. That is the highest going back to February of 2016. And of course, negative interest rates were first introduced in Japan in January of 2016. So we're almost back at those levels. And we know the BOJ has its yield curve control mechanisms for the 10 years, specifically The longer end of the curve, though, the longest end is a different story. And finally, I did want to point to iron ore as well. Of course, you saw a rebound temporarily yesterday on optimism around the China easing story. But once again, regulatory concerns, China's efforts to rein in prices, dragging down futures again in Singapore overnight, more than 7% lower to $130 a ton, Matt.
All right, very interesting. We're watching the JGB. I love that story of Japan versus the rest of the world's central banks. But of course, Ukraine is front and center when it comes to driving stocks on a daily basis. The S&P futures right now down about 0.6%. So it's a relatively risk-off situation. On the other hand, you might expect crude to rise in that situation. And WTI is falling today, down to 91.62 a barrel. Gold on the way up, 1888, getting closer and closer to the 2,000 level. We haven't seen that since June of last year, and Bitcoin right now down about 2%. I will say that I have a really interesting, this is a deep tease, Anna, a Buffett gauge, a Warren Buffett gauge that Ven Rom brought up, and I'm going to wait to show it to you until after the next break. So stay put for that.
Okay, a deep tease, very interesting. We will stay put. I'm certainly here. Let me show you what's happening on the European map then. Matt, you were talking about weakness in US futures, and this is what the European picture looks right now. Struggling for direction in the first couple of hours, now seemingly settling to the downside. So certainly many of the major markets in Europe to the downside, but the German DAX fairly flat, and the CAC 40 managing to cling on to gains, and luxury is a big part of that. But the FTSE 100 down by 0.6%. Weakness in oil prices, perhaps weighing on some of those oil names in the London market. It's interesting, Matt, that you put oil and you put gold in your list of assets to keep an eye on. I will continue to do the same because I thought the divergence between the two was worth noting. Yes, we are seeing risk aversion. We're seeing money going into the yen, coming out of Russian assets, and money is going into gold, but we're not seeing a pickup in oil prices, and that's interesting. We'll talk about the longer story with oil, the supply-demand dynamics a little bit later on with our big take story. But interesting to see that Brent is not picking up despite all of the claims and counterclaims around what is going on the Ukrainian border and the level of Russian troops there. Interesting corporate focus for us today. Commerzbank, a really good story out of Germany. That stock up by 6% this morning. This is a company that is really going to benefit when we start to see ECB interest rates go higher. They made that clear this morning, and that is something the market is really latching onto. And here's a good story on the corporate side. Kering, the luxury goods company in Paris, and of course that's partly why we're seeing the outperformance in Paris because of these heavy-weighted luxury goods names there. They own the Gucci brand, and it's the Gucci results that help this stock look, well, a little bit more Gucci perhaps this morning with that move to the upside, certainly flattering the numbers. There was a film from Lady Gaga, House of Gucci. Apparently that kind of publicity helps as well, Kaylee. So all of that putting a spotlight on luxury today.
That is a film I have not seen. A lot of interesting individual company stories to look at today, Anna. There's also a lot to look at in terms of the macro, bigger picture, including the G20 finance ministers and central bank chiefs meeting in Jakarta for their first gathering of the year. The pandemic, inflation, and taxes are set to dominate talks. Then President Biden will travel to Ohio, the great state of Ohio, as Matt Miller would call it, to discuss the bipartisan infrastructure law and what it delivers for the American people, continuing to make his pitch. We'll get Turkey's rate decision at 6 a.m. New York time, so we'll keep a close eye on the Turkish lira. And then back to the earnings stories. Walmart next on deck here in the U.S. 7 a.m. New York time is when we'll get those results, and a lot of attention will be paid to their pricing power, what their margins look like, considering they cater to a lower-end consumer, and inflation is a big problem for that group in particular, Matt.
All right, very much focused on flyover country today. Now, the Biden administration is also rejecting Russian statements that it has been pulling back some forces, with Russian Foreign Minister Sergei Lavrov saying Russia will send a response to the U.S. on security today. Meanwhile, EU leaders will discuss the Ukraine crisis as well. Jack Fitzpatrick, Bloomberg government reporter, joins us now from Washington, D.C. Our European correspondent, Maria Tadeo, is live in Brussels. But Jack, we'll start with you. What are we hearing from Washington, Ukraine?
Essentially more of the same. The U.S. standpoint on this is that it's an escalation, if anything else, from Russia. They said it looks like they're adding about 7,000 troops. That's in addition to the 150,000 figure that we've heard the president say recently. We have already heard a denial from a foreign ministry spokeswoman in Russia saying that that's not true. Really, it appears the U.S. is trying to head off attempts by Russia to sort of promote or do somewhat of a PR campaign indicating some sort of pullback. We know that Russia is already talking about ending its Belarus exercises on Sunday. So they want to sort of have some public image issues showing a pullback, but the U.S. is saying that really the same thing we've heard from the White House and other U.S. officials recently, which is that Russia is just adding to the troops near the border, and there really hasn't been a de-escalation of any kind.
And we're heading into further rounds of diplomacy, aren't we, Jack? We know that we're going to see this emergency summit of European leaders. More from Maria on that in just a moment. G7 foreign ministers will be meeting. In the run-up to that, we know that President Biden and the German Chancellor Olaf Scholz have been speaking. What's the aftermath of that call?
The statement following that was a reaffirmation of support for Ukraine, the same kind of stance you've heard already from the U.S. But yes, it is notable that even as recently as yesterday, the president was on the phone with the German chancellor and remaining engaged in this, even as Biden is kind of looking to get almost out on the campaign trail or do more domestic-focused events and engaging with voters in Cleveland today and elsewhere. He's staying pretty involved in trying to at least work the phones with European allies on this.
All right, Jack Fitzpatrick of Bloomberg Government down in Washington for us. Thank you so much. Now let's head over to Maria Tadeo in Brussels for the European side of the story. EU leaders will, of course, be meeting later today to discuss Russia tensions. Maria, we've been discussing this for a long time. Are they going to take any steps forward of any kind today?
Well, you know, Kaylee, I would say for them, this is becoming a difficult situation this morning, particularly over the past 2 hours. We've seen that events are escalating, and this has taken a turn for the worse. Now, the European officials that I have spoken with this morning, they say that, of course, they do not believe that Russian video. They're not able to take anything the Russians say at face value, and they want to see their own intel proof that these troops are being pulled back. The other concern today on European leaders' minds is this idea that Russia could pull back men, but not the ammunition. If the ammunitions and the weapons stay in countries like Belarus, that is still going to be a problem. And of course, concerns that we hear this morning from the Europeans, but also the Kremlin, saying the situation in eastern Ukraine is very fluid, but it's also becoming very tense. Now, when it comes to potential sanctions today, the Europeans say they're still united on this. They know they are going to take an economic hit on this, but still the big question is the details. What type of sanctions? Are we going to get any clarity on this? The other issue, of course, is financial help to Ukraine. A European official told me that this country is losing millions on a daily basis in capital outflows. And at one point, it's going to be the United States or the European Union, but someone is going to have to prop them up financially in bigger numbers.
What do we know about, we see the oil price coming down, Maria. What do we know about Iranian nuclear talks?
Well, look, they continue. It's funnily enough, in this stage, the European officials look much more optimistic on this. They say at least we're still at the negotiating table. But really, Matt, the focus this morning in Brussels is still very much Ukraine, precisely for that reason that I mentioned. A lot of concern around the situation in the Donbass, particular that area. We know that President Zelensky is there today inspecting the military. The Russians are saying that they worry the Ukrainians are going to escalate on that front, and the Ukrainians say that they fear some type of attack from the Russian-backed separatists in the region.
All right, Bloomberg's Maria Tadeo in Brussels staying on top of this story for us. And another story we are staying on top of this morning, more details coming out about that U.S. investigation into how Morgan Stanley executives handled block trades. Bloomberg has now learned that authorities are examining recordings of phone calls between the bank and outside fund managers. The recordings are of conversations involving Paul Passy, one of Morgan Stanley's top equities executives in block trades. He has not been accused of wrongdoing. So, Matt, we continue to see more and more detail coming out about this due to Bloomberg's reporting. But really what this shows is an escalation in this probe that has been around since 2018, but seems like new life is now being breathed into it.
Yeah, absolutely. And there have been questions about the block trading process and structure for years before that. One of the problems may be that there just aren't the rules, specific rules necessary, and it's going to take a lawsuit maybe to create those rules rather than writing them down beforehand. They end up creating rules with prosecution. It'll be interesting to see what other Wall Street banks do as well following this, because they're going to have to follow whatever structure comes up. And we see other changes in structure as well, like dark pools. Morgan Stanley controls 3 dark pools. Previously, Previously, you were only allowed to trade 5% or less of a stock's volume on a dark pool, but if you had more than one, you could trade 4.9% on all of them. So that's changing as well. Anna?
Yeah, and you're right that the big question here is whether we need to see some sort of bigger revamp of the way that these large pools of stock are offloaded. And interesting in our reporting that they flagged the criticism that come from all angles here. So those that are selling get angry if they feel they don't get the top price they could, and the price drops before their stock is all offloaded. And those buying feel that they're under some kind of political pressure perhaps to get involved in deals. Maybe they don't particularly want to. So this is certainly something that's going to run and run, Kaylee.
And it is tricky, as we are coming to understand. Now let's get back to some stocks moving in pre-market trading in the U.S. Morgan Stanley is not yet trading, but a number of stocks are, and a big one to the upside is DoorDash, which reported after the bell yesterday. Record deliveries in the fourth quarter. It was a beat and raise. Obviously, not all of us are cooking. A lot of us are still ordering food to eat on our couches. I have to admit, I am one of them. DoorDash shares are up 24% in early hours. Another stock moving to the upside on earnings is Cisco, which of course makes computer networking equipment, gave a really bullish outlook, and that stock is up about 3% before the bell. One other one that we do have to mention, though, is NVIDIA, and this is a really interesting story because they beat expectations, both in terms of the revenue they reported and the forecast. But one analyst pointing out, NVIDIA lives in this weird world where investor expectations are always actually higher than consensus estimates, so it's not enough to impress. So that stock, the U.S.'s biggest chip maker, down about 3% before the bell, and of course they are trying to rebound, Anna, from that failed ARM deal as well.
Right, yeah, that is indeed a weird world. More on that shortly. Coming up on the program, Airbus posts record profit for 2021. We will speak with the CEO, Guillaume Faury. Our colleague Guy Johnson brings us that interview with Airbus. And Freddie Late, Latitude Investments CIO, shares his market views. How much is geopolitical tension weighing on his mind right now? Plus, an unhappy ending for inflation. We'll bring you part of our conversation with the billionaire activist investor Carl Icahn ahead. This is Bloomberg.
Sooner or later, a situation like this is going to end relatively badly. Some less badly, some more. But you can't keep printing up money and printing it up and printing it up because you get what you have now that you can't control. The government can't control inflation.
Variant and the latest wave have an impact on not only consumer trends but your business, and do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida, and I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Earnings earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kaylee Lyons here in New York, Anna Edwards with us in London. I was struck once again by one of Ven Rom's posts on MLive, or specifically on Daybreak, actually. DAYB Go on the Bloomberg terminal is the first thing I check every morning when I wake up. He's showing a Warren Buffett gauge of stock valuations, which is basically gathering up the total value of all the stocks in the U.S. as measured by the Wilshire 5000 and comparing them to GDP. Right now, the Wilshire 5000 market cap is about $45 trillion, and U.S. GDP is about $24 trillion. So we're trading at about 189% of GDP, even after the last drawdown. The concerning thing is that that's still a lot higher than we were in the dot-com bubble. At that point, we were only trading at 143% of GDP. So stocks still look pretty pricey. Ven Rom joins us right now, Bloomberg cross-asset strategist. Ven, what does this mean? Does this mean we have to come down considerably before valuations look cheap enough to buy?
Absolutely, that's spot on, Matt. We are way too expensive. If you look at the U.S. stocks, I mean, that is the Warren Buffett gauge is one measure. But if you look at equity risk premium, in the past few years, they've shrunk, and they've shrunk a whole lot, which means that investors are kind of underwriting the risk of owning, for instance, the technology basket, NASDAQ 100, and at an additional risk compensation of just 200 basis points over treasuries. That is a ridiculous way to price the market, because you can't be underwriting all the stock risk for just that amount of money. That's ridiculous. So I do think that valuations have to come down a lot to make stocks more compelling. How much more is, of course, the question. My analysis suggests that we will get to sane valuations when the S&P goes to somewhere between 3,900 and 4,100. On the NASDAQ 100, I think that the fair value will be somewhere around 13,450. Clearly, we've got a long way to go before we get there.
A long way to go. Ven Rom with his definition of sanity. I like that very much. Let me ask you, what is in the driving seat, Ven? Is it the Fed and our pre-existing preoccupation with inflation and the inflation fight, or is now geopolitics firmly in the driving seat?
Morning, Anna. Definitely today and the whole of this week has been characterized by risk-off moves from Ukraine, and that is putting a bit to treasuries. But I do think that the longer-term picture, assuming that the tensions abate, and I do hope they abate, is that I do think that the longer-term picture is one of higher treasury yields. Definitely front-end definitely looks poised for a bigger sell-off. And the markets are already pricing six rate hikes this year, which I think is in the ballpark. And we heard from the Fed minutes yesterday that they will kind of accelerate the pace of increases should inflation not soften. And they've pretty much taken that stance for the past 1 year. That has yielded them no results. And as Carl Icahn said, this may not end very well.
Okay. Ven, thank you. Thank you, I think. Ven Rom of Bloomberg Markets Live. Thanks very much for your thoughts. Remember, you can get further analysis from the Markets Live team. MLIV Go. That is the function to use on your terminal. Coming up next, Airbus CEO Guillaume Faury joins the program. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now back to the corporate earnings. And Airbus posted record net income for 2021 and set plans to reinstate a dividend. A year-end delivery push helped the company retain the crown of the world's biggest plane maker for the third year in a row. Joining us now is Bloomberg's Guy Johnson to kickstart our conversation this morning with Guillaume Fauret, the Airbus CEO, who will be joining us from Toulouse. Good morning, Guy.
Good morning, Anna. Thank you very much indeed. Good morning, Guillaume. Thank you very much indeed for your time. Let's talk about the numbers first of all. You've beaten expectations. As Anna says, you're going to be reinstating the dividend. You're hiring aggressively. Guillaume, is the pandemic now behind Airbus?
No, the pandemic is not behind us, but we are on the recovery. We delivered last year 611 aircraft, slightly higher than our guidance. But there's still a long way to go to recover the 863 we delivered in 2019. So moving forward, but still with the effects of the pandemic.
You bring up the issue of guidance. I've read a number of analyst notes this morning. They think, once again, Guillaume, that you are being cautious with your guidance. Guillaume, are you just managing expectations here? As you say, you've beaten again this year. Or is there something going on, particularly with free cash flow? Deliveries look good. Free cash flow looks a little bit shy of expectations.
Well, we've explained to the analyst the bridge to 2021. We had a very strong 2021 indeed that has beaten expectations. Moving forward, we have given a guidance of 720 planes to be delivered in 2022. The guidance for 2021 was 600, so we have done slightly better. But when you compare 600 to 720, that's plus 20%. And I mean, it's not going to be easy, but we are on the trajectory and we're committed to those numbers.
Okay, let's talk about what is happening in terms of the business right now. What are you seeing on input inflation? How is the supply chain holding up? How easy is it to hire people right now? How much pricing power do you have? What is happening right now? Clearly, inflation is a really big narrative. How is it affecting Airbus?
So thank you, Guy. A lot of questions. In the last 18 months to 2 years, we've focused a lot on the demand side, on supporting our customers, reorganizing the production to adapt to the pandemic situation. Moving forward, we're ramping up again, and we are doing this in a very complex environment, in particular for our supply chain and our suppliers. So I guess the next 18 months will be very much about managing that situation with suppliers. They are in a ramp-up situation with a very complex situation to manage at their end, with access to raw material being difficult and the prices being very high. The price of energy is very high. Logistics around the world is a challenge and the prices are very high. And last but not least, and you said it, finding the right people, the right employees, the skills, the human resources is becoming increasingly difficult. So we have a lot of things to manage. We have organized ourselves to manage the situation with the supply chain in COVID-19 to gain anticipation and visibility of what's happening with our suppliers. And we will use those tools, those ways of working to continue to anticipate and resolve problems before they hit the production. But I guess the most difficult part of 2022 and maybe 23 moving forward, again, will be supply chain.
Okay, so supply chain remains front and center. Guillaume, good morning. Let me ask you about what is now a very public standoff with Qatar Airways. They've been big buyers over the years of Airbus aircraft. This is over the A350, of course. They've been loyal buyers in some people's view. Are you ready to lose Qatar Airways as a customer of Airbus if that's where this ends up?
Well, we are in a unfortunate situation with Qatar Airways, who is indeed a very important customer of Airbus. We disagree on an important aspect of the dispute, and therefore we want to defend ourselves. You know that Qatar has put a claim against Airbus, so we have to defend ourselves. But obviously, we will work hard to find at a point in time an amicable resolution, because we want to stay with Qatar Airways. And generally speaking, we're working very hard to serve customers. That's what we have done in the last 2 years in a very complex environment. And we want to keep doing this moving forward. So I hope we're going to find a way forward with Qatar Airways.
I wonder about the supply chain, Guillaume. What's it look like to you right now, and how is chip availability panning out? I mean, is this going to be an issue that we can put behind us after the first half?
Yes, thank you, Matt, for that question. Actually, the supply chain issues on the chip and the microconductors has been impacting a lot other industries, and in particular the car industry. We've not been in that situation so far. Of course, we've had some warnings here and there to look at and to anticipate and to resolve, but we are not in the same situation. Now, moving forward, we have to remain very prudent, and we continue to monitor the situation on that hand. And I can't say we will resolve it, because we are not in that very critical place that other industries find themselves.
Guillaume, can I just return to the issue of the 350 and the issues surrounding the paint and the flaking that is happening on that aircraft? How close to a fix are you with the Qatar aircraft? How close to a fix are you broadly with the fleet? And how many other customers are being affected by this problem? And do you see issues with those customers potentially as well?
We have a specific situation to manage with Qatar Airways that is linked to the fact that they have taken the decision with their authorities to ground a number of airplanes because of the paint situation, and we consider there's no reason to ground airplanes. That's why we have a very different situation with other airlines, and we are managing the issue, and it's not a big issue, in the way we are managing other ones with the airlines in a professional way. So again, we have really a very specific situation with Qatar Airways that we need to manage as such.
These guys are really into Qatar. I'm more interested in the planes, Guillaume, and the helicopters. You got a chopper over your left shoulder there. You're a test pilot in those to kick off your career. Are high net worth individuals buying a lot more private planes? Is corporate travel picking back up after the pandemic? Are you selling more helicopters?
The recovery in the helicopter market has been mainly driven by military orders and more recently by the light single-engine civil business. And that's a positive development because, generally speaking, when we see the low end of the market, the civil market picking up, then it's a positive development moving forward for all the segments. We are not particularly strong or focused on corporate helicopters and flights. We have a business on that side. It's developing positively like others. And as you know, we are not in business jets. So that's something that is a bit far from the core of our business. The core of the business is the traditional segments of helicopters. And when we look at commercial aviation, that's really the commercial airplanes themselves.
All right, well, thank you so much for joining us to discuss the core of your business and beyond. Guillaume Faury, Airbus CEO, appreciate your time. And thanks as well to Bloomberg's Guy Johnson. And of course, later today, Guy and I will be interviewing the Air France KLM CEO, Ben Smith. That's coming up at 11 a.m. New York time, Anna.
It is just after 10:30 in London and 5:30 in New York, and here is what you need to know. The US says that Russia is adding up to 7,000 troops to the 150,000 it says are already near Ukraine's borders. The Kremlin calls that assertion fake. It said earlier that some Russian forces in the region are returning to their bases. Oil's stunning recovery. Crude was in a total collapse in spring of 2020. Now it's on the brink of $100 a barrel. We'll dive into today's big take story. That's in a moment. And more details coming out about the US investigation into how Morgan Stanley executives handled block trades. Bloomberg's learned that authorities are examining recordings of phone calls between the bank and outside fund managers. The recordings are of conversations involving Power and Passy, one of Morgan Stanley's top equities executives. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons, both in New York, of course. So a lot to think about when it comes to the geopolitics and the market struggling to really work out effectively what risk looks like this morning, it seems. Matt, what do you see as you head towards the start of US trade?
Well, we have some conflicting indicators, as you pointed out earlier, Anna. We do see S&P futures down on the concern surrounding Russia and Ukraine. On the other hand, we have crude down as well. A NYMEX crude trading for 91.52. This may have something to do with progression in Iranian nuclear talks, because that could be some more supply into the market. On the other hand, it looks like investors are worried enough to bid up gold to almost $1,900 a troy ounce. Right now, $1,886. It's the highest level that we've seen since June of last year, so big gains there. Bitcoin, it's falling about 2% right now, 43,240, which is in line with the narrative that it's just correlated with risk assets. So we have a couple of conflicting indicators, although I guess if you take the Iranian news into account when you look at crude, then it's really a risk-off day. Kaylee, what do you see in terms of the pre-market movers?
Well, obviously, there's a lot going on at the macro level, and there's a lot going on at the micro level this morning as well, Matt. A lot of big movers in the early session here in the U.S., DoorDash being one. It reported after the bell yesterday. Best ever quarter in terms of order deliveries. People obviously still want to eat at home, and it also beat and raised in the quarter. So that stock is up about 25%. Another mover to the upside is Cisco. In addition to a forecast that topped expectations, it is raising its buyback program by $15 billion. So that stock is up about 3%. Plunging to the downside, though, is AppLovin, which is a digital marketing technology company. Its revenue forecast missed the mark. It's down 18% as a result. And NVIDIA also moving to the downside despite beating on the last quarter and the current quarter guidance. Expectations on the part of investors clearly were just a lot higher than that, Anna, and as a result, that stock is down about 3.5% before the bell.
Yeah, complex picture when it comes to those expectations, as you were describing it, Kaylee, around NVIDIA. Let's get to the European session then, and a little bit of weakness here in keeping with what Matt said about the US futures picture, moving to the downside, broadly risk off, but not to a great degree here in Europe, down 0.2%. We have that movement into gold that Matt was talking about, but we do have some individual stories that are cutting through, some earnings stories that are really cutting through in a couple of sectors in particular, the banking sector and luxury. We knew that banks could be, well placed if we see rates going higher, and that seems to be a narrative that the markets are latching on to more and more when it comes to Commerce Bank. I spoke to the CFO earlier on, Bettina Orlop, and she was spelling out just how geared that particular business is to higher interest rates from the ECB. And also Caring, this is a luxury story. The luxury sector just keeps on giving when it comes to good news for investors, and that stock up by just shy of 7% this morning. It seems the Gucci brand doing very well for them, and also doing well in China, which I think is really interesting, the way that luxury companies can do well despite their European provenance, whereas other Western brands maybe come up against headwinds in China, as we talked about in one of our big take stories just days ago. Kaylee.
All right, Anna, well, one other company story we are watching this morning is Nestle, the latest consumer goods company to voice concerns over input price inflation eating into profits. We spoke with the CEO earlier.
Looking at 22, inflationary pressures continue to rise, and so it's a safe bet that inflation will hit us harder in 22 than in 21. All of the internal work continues, but we also have to resort to responsible pricing. Pricing is easier at the premium end of a segment, so think about Nespresso that you mentioned, than at the value end of the segment.
Joining us now is Freddie Late, CIO at Latitude Investments. So Freddie, Nestle is just one example. Heineken was also talking about this yesterday, really consumer-facing companies across the board. When you think about inflation and pricing power, who has it and who doesn't, where do you want to put your money?
Good morning. I think it's absolutely critical at all points in a cycle that you're investing in businesses who have the power and ability within their products to raise prices when they need to and maintain their margins. I think a lot of the consumer goods companies are very strong at that through cycle, and Nestle and Heineken, I have no doubt, over time will be able to maintain their margins. The difficulty comes quarter by quarter at the moment when you're seeing these sort of real pockets of inflation and very sharp spikes in inflation, and the decision at the corporate level is, do we try and take prices up to match that and maintain margins in the short term, or do we keep them a little bit lower for now, maybe maintain our market share and our brand loyalty? But I believe you do need to back those businesses that have that potential to raise prices in the future, protecting your long-term value. And I think it's no more pressing than it is right now. And we've got these very, very high levels of inflation. I mean, the CEOs don't know if inflation next year will be slower, faster, or the same. So it's very hard to plan for.
Yeah, Freddie, good morning to you. I like that in your notes ahead of our conversation today, you said we don't give too much credence to guidance right now. Is that specific to now, or is that just generally, you know, none of us has a crystal ball, but do you think we face higher levels of uncertainty, almost exceptional levels of uncertainty about the rebound and the recovery from the from the pandemic ahead?
Yeah, I think that's true. I mean, we do look at company guidance because I think you can get a feel for, you know, companies on the ground in an ordinary operating environment should be well placed to give you a guide to what may happen in the future. But at present, you know, the guidance, even intra-sector, even in very homogenous sectors, is very, very diverse and dispersed because the CEOs don't know, the Fed doesn't know, you and I don't know where inflation's going to be in 6, 12, 18 months' time. And so making plans around that and predictions about the future at the moment, while always hard and nearly always foolish, is particularly so at the moment. Yeah, I think that's true.
Some of the stocks that you hold, you're very optimistic about in terms of the tailwinds from chip demand and the supply chain. How do you come about, or how do you expect, for example, Texas Instruments to grow? How much investment is necessary, and how long are they going to be in the salad days as this demand continues?
Yeah, so the chip cycle is one good example of where, you know, you have structural issues at the moment, but you also have structural growth over the next few years. You know, the demand for chips across many sectors is just rising. It doesn't mean these stocks can keep going forever, and there's always going to be a cycle in semiconductors. But investing in a business like Texas, who grows its free cash flow very, very consistently, has a great capital allocation plan. They are investing more money at the moment, so they've stalled their buyback. They're investing in 2 very large new fabs and other capital investments elsewhere to grow that capacity into the future. But if you look at the way that business was managed through the crisis, for example, they were the ones that kept things open. They were the ones that maintained inventory levels to try and please their customers and be able to meet the demands as we came out the other side. I think it's been incredibly well managed, and having some exposure within your portfolio to the positives of the problems at the moment. So, you know, chips are a problem for many sectors. Having some exposure to stocks that actually benefit from that tightness and the structural growth is a great diversifier within the book.
Freddie, I know that you're somebody who likes to focus on your stock selection. In your portfolio, you like to put together a portfolio that works for you and not necessarily be too distracted by the other big picture themes going around. We're not talking about COVID anymore, but we are talking about geopolitics. I wonder how your portfolio stands up in the face of, what should we call it, extended periods of geopolitical tension, or in the words of Jens Stoltenberg, the new normal, security crisis in Europe. Does your portfolio stand up to that?
Yes, we think we do. I mean, we've attempted to sort of stress test it. It obviously depends what happens, but we have very little. So we don't invest in emerging market stocks, and we have very little direct sort of Russian exposure or even really Eastern European exposure through our companies. Some have maybe 10% of sales and less of operating profit, but very, very little sort of direct exposure. I think the more meaningful impact could be around energy prices. And obviously we have, in the same way that we have exposure to semiconductors, not because they're causing such a problem at the moment. We think it's a great sector, but the natural benefit that comes from owning some of that kind of beneficiary of that supply chain. We own some energy companies as well. We own BP and Equinor. And I think if we do see more tensions and more geopolitical uncertainty replacing COVID as our sort of worry du jour, we will probably see energy prices even higher on top of the structural supply shortages and the lack of drilling we're seeing. So having some exposure to that in the portfolio is probably a net benefit of certain geopolitics as well.
We will pick up and talk about oil and the broader story there shortly. Freddie, thank you so much. Thanks for joining us. Freddie Late, Latitude Investments CIO. Coming up on the program, oil's runaway rally, how the COVID crash set the world up for $100 crude. More from our big take story. That's coming up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now, the two-year COVID crisis put many markets on a wild ride, but few have been crazier than crude oil. The total collapse in 2020 to the brink of $100 a barrel. Today's Bloomberg Big Take story looks at the path for oil so far and where we might go from here. Let's get more now with our European oil editor, James Heron, who joins me on set here in London. James, very good morning to you. So, I mean, we're not all that far from $100 a barrel, $93 on Brent, when you consider that we were negative a couple of years ago. I was saying to you earlier that I remember struggling to work out what on earth it meant to see negative oil prices 2 years ago whilst broadcasting from my living room, which is also something I never really expected to do. So how did we come from negative oil up to $100 almost?
Well, the shock of that initial crisis is really what sowed the seeds for what we're seeing now. The response from major oil companies, OPEC ministers, shale oil drillers, they all pulled back massively, cut investments. OPEC became really cautious and really wanted to protect the price recovery at all costs. And that's what brings us today, where The major oil companies aren't really growing production. The shale drillers are mostly still prioritizing giving back cash to their shareholders, not drilling in like crazy like before. And OPEC is still being super cautious and doesn't want to open the taps too wide and push down prices.
What's it going to take for, the U.S. has often been talked about as a swing producer lately because a lot of OPEC producers don't have any spare capacity. What's it going to take for Texas to turn on the taps again, or for shale to start pumping out again, especially at $90 a barrel?
Yeah, there's a lot of money to be made if you're willing to grow production. But investors still aren't showing signs that they really want that. They want returns. They want companies to give them money back from the barrels they are producing. And the companies are drilling a bit more. They're planning to expand production a little bit, but it's not the kind of crazy bonanza we saw in years past when oil was $100, when everyone was just chasing growth at whatever the cost.
Well, and if we aren't seeing that investment into more production when it comes to fossil fuels, has this wild ride oil has seen accelerated the transition to greener forms of fuel, to clean energy?
It's partly a result of that transition, certainly. The major international companies, particularly in Europe, are really saying they're not going to try and really grow production of oil and gas in the past, and they're going to put more investment into renewable energy. But then there's also doubts about the current cost of living crisis that's coming from these high prices, whether that could undermine support for green initiatives, carbon pricing, and so on. So it could go either way at this stage, and it's difficult to tell how the current price increase will really affect things in the longer term.
Okay, yeah, how that will play out, how that will incentivize production or not, and investment. James, thanks so much for joining us. Good to get your thoughts. James Heron, our European oil editor. NI Big Take is the function to use on your Bloomberg if you want to check out our Big Take story. Oil, the subject today. Now, coming up, an exclusive interview with Pioneer Natural Resources CEO Scott Sheffield. That's at 11:30 a.m. in New York, 4:30 p.m. in London. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Billionaire activist investor Carl Icahn told Bloomberg's Eric Schatzker that while he's not predicting a bear market, he doesn't think the current inflationary environment will end happily for investors.
It doesn't end happily. I've seen God knows how many bear markets, and they're similar in one way. It's a sad thing, and a lot of people lose a great deal of capital. And I am not predicting, though, Eric. I'm not predicting that we're in a bear market. I'm not predicting that this is going to end, sort of this euphoric atmosphere. But I am predicting this, that, and it's not much of a prediction, I guess, but sooner or later, a situation like this is going to end relatively badly. Some less badly, some more. But you can't keep printing up money and printing it up and printing it up, because you get what you have now that you can't control. The government can't control inflation. It controls it only what they're doing, what Volcker had to do. You know, bring interest rates up to 18%. I remember those days. It was unbelievable. So I think that's going to happen, but I'm not here to discuss. I'm not a macroeconomics guru, and I just look at simple facts. That's all I do. Simple facts. And a simple fact here is the tension between inflation and printing up money can't continue to exist without busting open.
You say, Carl, that you're not predicting a bear market, but this is going to end in an ugly way. What's the difference?
Okay, well, I'm not predicting a near-term bear market. Nobody can predict what's going to happen next week, next month, maybe even next year or two. You really can't predict it. Too many variables. The whole political scene, the whole question of the presidency. But on a big picture methodology, you can look at it and say, it's simple. You can't, I think it's economics 101 in high school. You can't just keep pushing out money. You can't just keep giving away money and giving away money, because that money will definitely lose its worth, like anything else.
That was billionaire activist investor Carl Icahn. And of course, he was talking about inflation there. And inflation is going to be front and center for one company reporting today, and that is Walmart. That is what I am watching. Walmart earnings at 7 a.m. Eastern time. It's really a question of their ability to pass on the higher input costs they're facing on freight, on labor, to a consumer, which is really the lower end consumer, is what Walmart is targeting. Inflation hits them the hardest, so it may impact their ability to exercise that pricing power, may show up in the margins. So that's going to be very interesting to watch in just about an hour's time, Matt.
Yeah, I'll be paying close attention, obviously, to Walmart. Huge indicator for the U.S. consumer. I'm watching the return to work because there's an interesting juxtaposition in Hong Kong. Bankers are fleeing the city due to the zero COVID policy and increased regulation surrounding movement there. Here in New York, we're supposed to be going back to the office. I thought it was happening, but Eric Adams, the mayor, has met with, I think, 100 CEOs over the past week or so, and is almost begging them to get their workforces back, because I saw an interesting fact in the story. According to Castle Systems, only 28% of workers are swiping into offices every day, and that is a very low figure. It's come down substantially over January, Anna.
Yeah, that's interesting. I was looking at the Pret Index, which tries to measure this in a slightly light-hearted way on both sides of the Atlantic. It says that half of Wall Street may be back at their desks. That was the latest from our Pret and Bloomberg Index. But London, a little further ahead, almost back to normal, according to the Pret Index. It certainly feels busier out there in the most recent few weeks. More Bloomberg surveillance is ahead. We will hear from AutoNation CEO Mike Manley, plus others. This is Bloomberg.
what do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
There's a real risk that the Fed is about to embark on a policy mistake.
It's a really tricky time for central banks.
Inflation has been a lot stickier, a lot higher, and it's actually broadening out as we sit here.
I do think that there is a piece of this inflation story that will have to be squeezed out by the Fed.
They got a little bit too far behind the curve. They're trying to get aggressively in front of the curve.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Waking up to confusion from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down 0.5%. TK waking up to disputed claims from Russia and the U.S.
Yeah, the things have changed in the last 24 hours. Maybe we're not back to the gloom of a few days ago, John, but you see it off the tape. There's a real tension out there. John, one statistic gets me. It's the race of gold to $1,900 an ounce. Gold is one indicator of the continental European tension.
So, Tom, where are we? The U.S. disputing claims of a Russian troop pulled back. The Russians disputing U.S. claims of a Russian troop build up. Pick your poison right now for this market. I don't know what it wants to do, Tom. We're down about 0.6 on the NASDAQ, down 0.5% on the S&P.
Ever so slightly, ruble weakened yesterday off the terse statement from the Secretary of State. I went back and read it 3 times, John. It's easy to do. It was real short. And Secretary Blinken made very clear that he's looking at action phrases. There were 2 action phrases I could discover in that statement. And it's real simple. All it comes down to is he's got a few action points and they have to respond. And there was a headline an hour ago from Lavrov saying they will respond.
Lisa, this equity market gripped by headlines out of Ukraine, Russia, and the United States.
And part of the reason why is because you don't have that same promise of a Fed put behind it. And I think that this is the game changer. The reason why we're seeing so much more volatility is because the Fed is worried about inflation. They are going to react to inflation. They're not going to react as a Fed put if there is disruptions that do affect markets in the same way that they used to.
Well, what did you make of the reaction of the equity market to the Fed minutes? The turnaround, we were down what, 0.9%? We finished the day positive.
Let's be clear. The Fed meeting minutes said absolutely nothing we did not know. They were interpreted as dovish because they did not say we are going to raise by 50 basis points and roll off the balance sheet by $2 trillion. Therefore, it's dovish, and suddenly you saw people bringing down their expectations for a 50 basis point rate hike till below 50% for the first time since that CPI print. You make sense of it. I don't know. I don't really get what people were gleaning from this.
This is what Bob Michaels said to me yesterday, Tom, over at JP Morgan. They have a lot of catching up to do. That starts with a 50 basis point move in March. If they don't do that, this is what Bob says. The market will lose confidence in the Fed that they're too far behind the curve.
This comes down to credibility, John, and to your point, if they'd done an emergency 25, that gives them a more supple choice set at the March meeting. Those days are gone. We're now out to the March meeting. What's the choice set from there to the next meeting? And they're beginning to limit their choices if they're married to Greenspan's phrase, measured.
Let's whip through this price action. We're down 0.5% on the S&P. On the Nasdaq this morning. Good morning to you all. Down 0.7%. A bit into the havens, a small one. Yields lower by 2 or 3 basis points on 10. Still north of 2% at 2.012%. In the FX market, euro dollar unchanged at 113.73. And this one stands out, Lisa. Curious. Crude down 2.2%. WTI 91.60.
That is curious, because you would think that with the disruption that we're seeing between Russia and Ukraine heating up and really contributing to the risk-off environment, oil should be bid up. Explain that, especially as you get a resurgence and a reopening in economies around the world. All right, for the data that we're looking at today, just briefly, in about an hour, we're going to get Walmart earnings, and that's going to be really interesting. 8:30 a.m., the first read on the U.S. economy for the day. We get U.S. initial jobless claims. I'm looking at continuing claims, which are expected to trend downward yet again. Are we at full employment? You have about the same number of continuing claims, people receiving jobless benefits, as before the pandemic. At what point can we say, are we there? And this is actually one of the most disputed aspects among Fed officials. Today, we're going to hear from a slew of bank executives at the Credit Suisse Financial Services Forum, including Goldman Sachs' David Solomon and Bank of America's Brian Moynihan. They speak at 8 a.m. and 9:40 a.m. respectively. I want to hear about how much people are actually depleting their savings. Is there a Gucci-Nestle divide? We saw Gucci actually report earnings that beat expectations, showing that they can pass along margins. Nestle is struggling. Is this a differential in the wealth gap? Is this the K-shaped recovery? And do they talk about how this affects, frankly, the growth and the dynamism, both in credit as well as in their underlying performance? And today, a slew of central banks speak. I know that you're going to be absolutely glued to this, John. We got ECB Chief Economist Philip Lane speaking at 9 a.m. and St. Louis Fed President Jim Bullard at 11 a.m. and Cleveland Fed President Loretta Mester speaking at 5 p.m. This really speaks to the volatility. They're all going to say something different. People are going to interpret it differently. People will take different cues. Volatility, implied volatility, is rising to the highest level going back to March 2020 in the Treasury market. And it's no wonder why. I mean, what is your compass right now, John, when people say the Fed is behind the curve, but at the same time, you have all these geopolitical pressures and potential risks to the economy?
I was just going to say that Gucci is clearly a consumer staple in the Keene household, isn't it, Tom? Isn't Gucci a staple?
They've gone so young and hip. You know, what's interesting about Gucci, John, and this does go to the recovery of the Pacific Rim, what I see in most of luxury is a complete pivot to what China wants and what the Pacific Rim wants. It's almost like Gucci's walked away from animals like me.
You're not happy with the designs over at Gucci, is that what you're saying?
There's just nothing there. You know, I walk in and there's like nothing there for me.
See how this triggered him, Lisa?
I mean, honestly, you knew what you were getting into, John. This is on you.
Marvin Lowe joins us now, Senior Global Macro
like
Strategist.
I mean, Selena's gone
State
for a more
Street.
simple approach.
Do you want to talk about Selena a little bit later?
Yeah, we'll do that later.
Marvin, geopolitical tensions once again, waking up, trying to process, trying to digest various headlines. How do you think all of this influences a particular central bank decision that takes place on March 16th?
Yeah, I mean, from the Fed's perspective, I don't think it's going to affect it at all. I mean, certainly a war is an altering event, particularly if it's a significant one. But with the tensions that have been around, I think the Fed has made it clear that they're playing catch up, and March is a given, and we debate whether it's 25 or 50, and whether May and June are equally live at those levels.
Do you believe, Marvin, that corporations domestically and frankly globally can adapt to what they've been given?
Yeah, I do. I mean, they have. From a financial engineering perspective, they've been very quick to embrace and ultimately reshape their balance sheets in a way that buys them flexibility. And these are for-profit organizations that have been nimble to change it to rapidly changing conditions, both from a global perspective as well as just from a mobility perspective. And you've seen that they've been able to navigate it. So I do believe that that's one of the strengths in the equity markets.
Well, of course, a lot of people have been baking this in for a while, even when this wasn't the case. And you do wonder how much has gotten ahead of things, especially as you've seen the biggest inflows into equity funds versus bond funds so far this quarter, going back to 2013. Can that continue, especially when you see the likes of Roblox and some of these other pandemic-era stocks absolutely get pummeled and return to pre-pandemic normalcy?
Yeah, I mean, it's this often described aspect of asset management and equity management, that you're looking for the winners and it's a stock picker's market. I would argue that that's always the market. That's what professionals get ultimately paid for. I mean, we're seeing demand for treasuries. The fact that we've repriced as much as we have and still have a 2% 10-year, and unfortunately, to a certain degree, flattening the curve, shows that there is a fixed income component associated with that. I do think equity markets still have a bit of a catbird seat. It might not necessarily be U.S. and U.S. growth stocks the way it had been for the last 2 to 5 years. There's potential diversification, looking for value outside, particularly geographically. But equities still do have a catbird seat in this discussion.
Marvin, are you actually advising people to buy longer dated bonds right now in the U.S.?
I mean, I actually do. I actually do like treasuries in here. I think you see from a geopolitical perspective just how demand for that security is from a hedging perspective, as well as our longer term view that we're not going to see yields get back to the pre-pandemic neutral rate levels. I think we're dealing with a different type of environment that way.
Marvin Lowe, we've got to leave it there, sir. Thank you for catching up with us. Marvin Lowe there of State Street. Waking up this morning to several disputed claims. One from the United States disputing claims of a Russian troop pullback. The other from Russia disputing claims from the US of a troop build-up. This came from Sergei Lavrov. Anne-Marie putting this out on Twitter just moments ago, Tom. New from Russia, the foreign minister says Russia will respond to US security proposals today and will make the letter public. The Kremlin says US claims on new troops near the Ukraine are unfounded. They go on to say it takes time for troops to return to base after drills. You can see where the dispute is right now, Tom, and it's been the story for the last couple of days.
Yeah, they're looking at the tactical, the minutia, and the security, and I guess the U.S. has lots of windows into seeing how those troops are moving. What I found stunning was a linkage of Blinken's statement, John, where there was so little wiggle room in the language. The action phrases there were "to be clear" by the Secretary of State, and then at the bottom of the short statement, a swift and firm response. What's a swift and firm response today from the Lavrov team?
And the extra developments overnight. I want to be very careful with those developments overnight.
I agree.
And be really, really accurate with this statement. So Russian-backed separatists in Luhansk, this is eastern Ukraine, claims Ukrainian forces violated the ceasefire agreement in 5 places overnight. It's really worth pointing out that the OSCE, this is the Organization for Security and Cooperation in Europe that monitor things like this, did not immediately verify any of this. And Lisa, I'd go one step further. It's worth noting that things like this haven't exactly been irregular over the last few years since this ceasefire was put in place. So they are some of the disputes, some of the claims overnight coming into this morning with futures down 0.6 on the S&P.
A lot of lack of clarity here. However, one thing remains clear to me, which is there is a new front with respect to the Western-Russia relationship. And I think that that's what NATO keeps sort of hammering home, that this is the new normal. And I think that that is what a lot of officials, especially as NATO foreign ministers, meet right now. They're trying to get their hands around how do you deal with that?
Some jitters out there at the moment. We're down about 0.5% on the S&P. Europe, the price action in equity is actually relatively contained. Futures on the Nasdaq down 0.7%. Yields in 3 basis points. Your 10-year just about north of 2%. With Tom Keene, Lisa Brambett and Jonathan Ferro for our audience worldwide on radio, on TV. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The US says that Russia is adding up to 7,000 troops to the 150,000 it says are already near Ukraine's borders. The Kremlin calls that assertion fake. It said earlier that some Russian forces in the region are returning to their bases. Meanwhile, European Union leaders will discuss the Ukraine crisis today. Meanwhile, Europe looks to be gradually leaving the pandemic behind. Germany is becoming the latest in the region to unwind restrictions that have disrupted life for 2 years. Chancellor Olaf Scholz announced that most of the COVID curbs will be rolled back by March 20th. Austria and Switzerland are planning similar steps. Hong Kong is deploying a tactic used on mainland China to root out coronavirus cases. It's planning a testing blitz of the entire city. Bloomberg's learned that Chinese medical experts will probably be brought in to help. Local media say the push will begin in early March. And more details coming out about that U.S. investigation into how Morgan Stanley executives handled block trades. Bloomberg's learned that authorities are examining recordings of phone calls between the bank and outside fund managers. The recordings are of conversations involving Pavan Pasi, one of Morgan Stanley's top equities executives in block trades. He has not been accused of wrongdoing. And Airbus is putting the worst of the pandemic behind it. The company posted record net income last year and has set plans to reinstate a dividend. The year-end delivery push helped Airbus retain the crown of the world's biggest plane maker for a third year in a row. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
We're prepared if Russia's ready to actually engage in meaningful diplomacy that would strengthen everyone's security in Europe. We're also prepared if they choose to renew aggression against Ukraine. The choice is really President Putin's. We haven't seen a pullback. We'd like to see one. If we see one, we would welcome it. We're prepared for diplomacy. We're prepared for aggression. We're prepared either way.
We haven't seen a pullback. We'd like to see one. The words of Antony Blinken, the Secretary of State, on ABC. From New York City this morning, good morning. Tom Keene, Lisa Brabbits and Jonathan Ferro. Futures pullback, disputing claims from Russia and the United States through the last 24 hours. We're down 5/0.6% on the S&P. Yields come in, Tom, down 3 basis points on 10. Still just north of 2%. And crude just a little softer, light to lower, negative 2% to 91.62.
I'm glad you mentioned crude, under 93 on Brent crude, 92.91, and it's just a compendium of data on the Bloomberg screen as we wait for the numbers, and particularly for Mr. Lavrov's statement out of Russia. Right now, with an update in Washington, Jack Fitzpatrick of Bloomberg Government. Jack, Mr. Blinken seems like he's come into his own. Tell us about the new Antony Blinken given this crisis.
Well, this is clearly one of the major early challenges for Blinken. He's taken a pretty vocal role on this. Obviously, the president himself is staying engaged to a certain degree. I'm not sure that Blinken necessarily has a role that's significantly different than what you would have seen from other secretaries of state in this kind of circumstance. Really, the U.S. line on this has been pretty consistent, that they're ready for whatever Russia does. They don't see an actual pullback from Russian troops, and it's at least been a consistent message, not something that they've gotten way out ahead of, but clearly a consistent message that you're seeing from the Secretary of State lately.
In your reporting, and this is a delicate question, and you can run around it if you want, is it different than the Afghanistan ballet in that handlers have said to the president, let the pros do this, where the president is essentially giving out to Blinken a lot more responsibility and development of diplomacy?
I think it is an issue that lends itself to that. I don't know if it's necessarily indicative of a major change in decision-making from the administration. For one, in Afghanistan, you had the president campaigning even before he was president on a pullout from Afghanistan. We've heard President Biden say he understood that could get messy. That's not necessarily a decision to wave away any advisors, but that was something that came from the top, whereas this has been a real wait-and-see game with Russia that allows the normal diplomatic efforts to go through. You can delegate to some extent and allow Blinken to make the statements that he's making. There wasn't some major campaign promise that got ahead of everything from Biden saying, here is exactly how I'm going to handle a threat from Russia. So I think it's a situation that lends itself to that degree of delegation, more so than Afghanistan did.
Jack, You followed Congress for decades, for years, and really people are looking. I can see John's looking at me like decades, maybe not decades, but years, because I know that perhaps, decade. But going forward, we're talking about Ukraine. We're talking about Russia. We are not talking about a domestic agenda. When you take a look at economists, they're factoring in $1 trillion fiscal drag. They are not talking about infrastructure spending, even as President Biden heads down to Ohio to talk about that. How much oxygen does this suck out of the room to getting some of that pushed forward?
It does make it difficult to send the message. It does, I think, distract from some of the agenda. For one, it's fascinating to see the president yesterday on the phone with Olaf Scholz, the German chancellor, talking about Russia. Today, with everything in the news regarding this, he's still going to Cleveland talking about the infrastructure bill. Separately, look, there's only so much Congress can do right now on Russia and Ukraine. They're talking about basically a non-binding resolution, but it does take a lot of the oxygen out of the room, and I think it creates an atmosphere of kind of chaos that Democrats have to respond to when they would rather be talking about how they're going to move forward with some sort of economic tax and spending bill or something. It makes it harder for them to send the message that they want to send, even if Congress can't do very much at a time like this immediately on Russia and Ukraine. This really gets the headlines clearly.
Jack, just real quick, we haven't really heard much more about that gas tax holiday. It kind of sprung up and then quickly died. Does that have legs?
That's a tough one. There's been enough pushback so that seems to be one of those ideas that's been floated, but we haven't heard that much follow-up on the Hill that seems to indicate it's moving forward right now.
Hey, Jack, thank you. As always, Jack Fitzpatrick of Bloomberg Government down in D.C. Lisa, you are not impressed with the prospect of this tax holiday, are you? Do you just don't think it moves the dial enough? I mean, it's something.
It's 18 cents. What does this do, right, long term? Does it actually bring the price down enough to increase disposable spending? Look, I'm going to pull a Tom Keene. I don't want to weigh in on this. People aren't looking for my opinions on this. I just don't really necessarily see. And frankly, there has been very little support for this. I mean, you have not heard people talk about how this makes economic sense, and frankly, how this really makes sense from policy either. What it does emphasize is the desire to look like there is some control and look like they are taking some action on this.
That's straight from the Tom Keene playbook. I don't want to give you my opinion, but
well, I'm trying to learn.
Anyway. I would suggest that the history of this is two very different groups come together, whether they want to admit it or not, and say no. One, of course, is the West, the oil makers, people that feel that it's stability, et cetera. We need the tax.
Yeah.
And the other is the environmental crew. They're on other sides of the debate, but they come together and take out the middle.
Tom, we've got two key stories then at the moment, haven't we? We've got the foreign policy and how it spills over into domestic policy here in America. We've got the Federal Reserve and how these geopolitical issues may shape the Fed in the coming months.
I agree with that. I mean, Ian Bremmer weighing in on it this morning. John, you read the minutes. Folks, full disclosure, I don't read the minutes. I find them useless. But, John, Ian Bremmer weighing in and saying Fed's minutes out yesterday contained 4 references to geopolitical tensions and 1 related to Russia-Ukraine tensions. That's a first. What's a first here is that the excuse, as Lisa mentioned, maybe to delay the March of 7 or whatever increases.
I won't give you my opinion on the minutes. I just think they're a waste of time. Tom, here's the quote on geopolitics in the minutes. It's on page 17. The possibility of geopolitical turmoil that could cause the increase in global energy prices or exacerbate global supply shortages. Now, taking note of it's one thing. Understanding what it actually means for monetary policy is quite another. The latter piece of that is obviously the most important. Tom, if we get a spike higher in energy prices, I can see how that might shape the ECB, given the economic spillovers there to see. For the US and this Federal Reserve, the decision's less obvious.
I'm not going to play the game. I'm just going to wait for the data, John. And right now, I think the most amazing thing of the week is Bullard modeling 3, 4, 5% real GDP.
You're playing the game.
I was going to say, we're all playing the game.
You're always playing the game.
I'm not playing the game.
Bullard and Mester coming up a little bit later with the Fed speak.
We're pitchers and catchers.
Definition, this is the game.
Tom Keene, Lisa Bramett, and Jonathan Ferro.
Game?
This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Breaking news this morning, Lisa has a problem with the price action. What's new? What is new? Futures down 0.5% on the S&P, on the Nasdaq down 0.7% on the Russell, down 0.75%. Lisa, I know where you're going with this. We were down, what, 0.9%? The Fed minutes come out, nothing new. We rallied to positive 0.1%. Here's something new. CPI, PPI, retail sales, and some Fed speak in between. Isn't that the information we should be moving on?
Exactly, which is the reason why I find it amazing that suddenly all of that information is suddenly being discounted with respect to the perspective for a 50 basis point rate hike, because the meeting minutes didn't mention it, because the meeting was held last month. I don't know, I'm just maybe losing it.
March 16th, just around the corner. Lisa losing it, Tom. Let's keep things on the rails for her. In the bond market, 2s, 10s and 30s, we look like this in the bond market. Yields come in, we back away. The disputes we're waking up to this morning are really difficult to get your hands around, I know. The US disputing claims of a Russian troop pulled back. The Russians disputing US claims of a Russian troop build up. I know, it's headline after headline, and at the moment yields come in off the back of all of this. We're down 3 basis points to just north of 2% on 10s. Yields back away from that 160 level we breached last week on 2s. Now sub 150, down another 4 to 148.47. That's something to keep an eye on. Switch at the board and finish on this, TK. I know you're following this really closely. Euro Swiss on the one hand, crude on the other.
Yeah.
Crude backs away by 2.5% to 91.39, and you just about see that Swissy strength in the mix, Tom, but not in a massive way. Euro Swiss just edging lower by 0.2%.
Yeah, I like what you said yesterday, John. Subtle, and folks, we're seeing subtle moves here. You're seeing it off Euro Swissy, weak yesterday, strong Swiss today. And I'm watching gold maybe more than anything, 18.80, 70 ounce, up $15. And really the key headline for those of you waking up, Bloomberg Radio, Bloomberg Television, across the nation at 4:35 this morning, Mr. Lavrov, representing Mr. Putin, said there will be a response today by the Russians, and we'll have to see what that is. Right now, eagerly anticipated, Charles Cantor joins us, Senior Portfolio Manager, Activist Investor, Neuberger Berman Long Short Fund. Charles, I want to talk to you right now about your view of the quality of cash flows of corporate America in the next year, given the soup, the uncertainty, the degrees of freedom you have day to day within a portfolio. What's the quality of cash flow?
Look, I think it depends where you look. If you look at businesses that are growing well with decent margins, the cash flows are excellent and the valuations are reasonable. If you look at businesses that are growing exceptionally fast with very low margins, there's no cash flow there at all. And those businesses have been under tremendous price action pressure. I think they're down over 50% from the peak. And they're still rich from a valuation perspective relative to companies that are growing just a little slower but much more cash flow. So our focus is on businesses with innovation, with technology, with businesses that can take pricing, and many of the businesses that enabled kind of the lives we lived through COVID and continue to live today.
Let's go to CFA Wall Street and Global Wall Street, Mr. Cantor, and discern here how you determine profit-making technology. Where do you exactly do that on the income statement?
Well, I think you start with gross margin. And make sure that there's enough gross margin there that after you do the investing to grow in your people and your product design and your marketing, you end up with decent operating margins. And some of the time you look at key performance indicators that would focus on just how much does it cost to acquire a company, how long do the customers stay, what is their pickup in terms of ordering more products the longer they stay in your own ecosystem. But it's a lot within the environment we're in. It's going to be a lot around which businesses out there can actually get price. There'll be no doubt everyone's trying to take price, but there are going to be meaningful winners and losers. And as value propositions collapse or get narrower, say across the consumer sector, if you're just taking price and not bringing innovation, if you're not bringing brand, or if you're not setting price like Amazon, and you don't have scale to manage what I'd argue would be potentially temporal supply chain inflation costs, your profit margins are going to be under tremendous pressure.
So meaningful winners and losers is really striking when you take a look at the likes of Roblox, which caught my attention yesterday. It plunged the most ever. It actually lost about quarter of its value overnight. Peloton, similar moves. You're seeing this. Zoom actually falling down to the sort of same trajectory as some of the most beaten up COVID stocks at this point. I'm looking at all of this and I'm wondering how easy is it to get ahead of this as a long short manager and make the most from it by getting on the right side of each trade?
Well, I think the three examples you provide are classic examples of businesses that saw a tremendous demand pull forward through COVID. And I can't speak to all of those businesses, but certainly in one of those businesses, they pulled forward 5 years of demand and misread that as a much larger tectonic shift in their total addressable market. And as such, as corporate managers went out and built an ecosystem to support a much larger, revenue base than they should have. And I think in this environment, you're seeing that a lot. Not only are the investors misreading the pull forward of demand through COVID, but corporate management has as well. And those that have done that will face stock price action, far worse than 50%. So I think we trying to work through our companies really on a couple of lenses. One is, do they have pricing power? And two, how significant was their COVID bump? And to what degree, is the COVID bump understood? And this is showing up in many of the brands out there that were massive COVID beneficiaries, many of which you've just flashed on the screen.
So, Charles, from your perspective, as potentially a short seller of some of these names, how active have you been trying to get ahead of this realization that we brought forward demand that may not materialize in the way that people expected?
Look, we're in an environment where things are moving at breakneck speed. It's not just stocks, it's the Fed. And so we're exceptionally active on the short side. And as a big picture, what we're trying to own for the long term are businesses that look reasonable on a free cash flow basis, have proper margins, and are growing at acceptable rates. On the short side, there's just still a massive valuation gap between businesses that are growing exceptionally fast with no profits and businesses that are growing just a little slower with a lot of profits. And you can imagine that the shorting opportunity in the former is vast. And that's where we've been playing.
Charles, I've got to stop the show and ask you with immense respect and all the people at Neuberger Berman about Katja Porzakansky's and Tom Schoenberg's reporting yesterday on short-selling abuse. I want to make clear that Mr. Cantor and Neuberger Berman were not mentioned. There's one way to short, and then there's another way to short. I had this conversation with Jim Chanos at his New York Historical Society, I think 10 years ago. Charles Cantor, how do you short versus the criticisms that supposedly the Department of Justice is investigating?
Well, I think I've been clear that I've stayed away from, trying to cherry pick individual companies that may face short-term headwinds. For us at Tom, it starts with our process. And our short book is comprised of a whole bunch of companies that we hope not to be short much longer than 3 to 6 months. We overlay a fundamental approach to that, meaning the decline in the share price is likely temporary, but driven by a set of earnings expectations that don't seem to be reasonable against the backdrop, of the industry or market backdrop. And so for us, it's rapid fire, it's renting, not owning. And we want to be very respectful to our firm's ethos around, being long-term investors. So we stay quiet on the short side, we do our work, hopefully we pick up a few pennies and we move on.
I hope you pick up more than that. Charles, thank you, sir. It's good to see you. Back in the office too, Charles Cantor there of Neuberger Berman. Let's set the stage for you this morning. What are we waiting for? We're waiting, Tom, for a news conference with the NATO Secretary General Jens Stoltenberg. That is about to take place in Brussels any moment now. It's actually meant to take place, Tom, about 20 minutes ago. So we're waiting for him still.
We're waiting for him still, and I would say far more. He is waiting, as are all the leaders, maybe the coalition of the willing and unwilling, however you want to put that, John. They're waiting for a response from Putin, Lavrov, from the Blinken statement yesterday. I'm sorry, John, ruble weakened off the terse Blinken statement. I don't want to think it was inflammatory or too much, but there was a shift yesterday with the clarity of the Blinken statement.
Well, Tom, what do you make of the claims and counterclaims that we're working through this morning? The claims from the United States that they're seeing a troop build up and not a troop pull back. And what we're hearing from the Russians is that they counter that by saying, no, we reject your claim that we're having any kind of troop build up. It takes time to pull back. Tom, the back and forth here. Secretary Blinken said the following: we haven't seen a pullback. We'd like to see one. If we see one, we would welcome it. We're prepared for diplomacy. We're prepared for aggression. We're prepared either way.
I'm going to go back to 2014 or even to the Ukrainian upset of 2009 and, of course, on to the horrific Malaysian airline tragedy that we had, and that we've seen this, John, forever. The difference now, as Greg Villiers and others have said, is we're seeing U.S. intelligence so visibly, so daily.
The US, the UK, Lisa, the NATO Secretary General at the moment over the last few days, very much on the same page.
And talking about, and I keep coming back to this, the idea that this is what you can expect going forward, a sort of pattern of more aggression from Russia. That was what he was talking about. And how they're going to respond might be this harder line, not necessarily taking them on face value.
When that news conference begins, we'll bring you the headlines from it as they pour in. From New York City with Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Futures are down around about 0.5%. This Thursday morning, this week is racing by. Good morning to you all. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Officials at the Federal Reserve concluded last month that they would start raising interest rates soon. They also were on alert for persistent inflation that would justify a faster pace of tightening. That comes from minutes of January's policymakers meeting. Traders have maintained their bets that the Fed will raise rates at least 6 times this year. In the U.S., the CDC says it wants to give people a break from wearing masks. The agency is reviewing its mask guidance and is shifting its focus to COVID hospitalizations as a key measure of how severe the outbreak is. The current policy is that if people live in an area with high transmission of the virus, they should wear masks in indoor public places. Activist Kyle Icahn is ready to go to war with McDonald's over pigs. Icahn told Bloomberg that the fast food chain needs to end its practice of using suppliers that house pregnant pigs in small crates. Icahn calls that inhumane, and he's prepared to nominate directors to stop it.
We are probably 90% there. We're putting up a slate. We're not going to fool around with them anymore. Putting up a slate and say, hey, you got to live up to your promise, and you got to do this.
McDonald's isn't commenting. Amazon has settled a huge dispute on payment fees with Visa. The e-commerce giant will now accept Visa cards across its global network. It will no longer charge an extra fee to customers in Singapore and Australia who use Visa cards on its site. Plus, the company will not turn off Visa cards from customers in the UK. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
The major concern is we cannot let Mr. Putin take over the sovereignty of an independent state by force. That would compromise the entire security fabric of Europe. That's something that cannot be allowed to happen.
Washington on the same page. That was Senator Ben Cardin from New York City this morning. Good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down 0.5% on the S&P. On the NASDAQ, we are lower by 0.7%. Yields come in 3 basis points, just north of 2% on 10s. Tom, waking up to disputes, claims, and counterclaims.
Absolutely. Counterclaims this morning, and we're monitoring the markets very carefully. They've been a very good litmus paper, if you will, of what we see in the headlines. And, of course, we are waiting for a Russian response to what we heard from Secretary of State Blinken yesterday. We'll bring you those headlines on radio and on television. Right now in Brussels, and most importantly, outside the Spirit, the buildings named in honor of the French diplomat Robert Schuman, is Maria Tadeo. She joins us from Brussels. Maria, in honor of Robert Schuman, it was his great hope as the founding diplomat of Europe, of modern Europe, I should say, that there should be a coalition of the willing. How's the coalition doing this morning? Mr. Blinken ended his statement yesterday talking about allies. How allied are the allies?
Well, Tom, I would say they're very much united on this. We know that when it comes to European politics, European leaders make a difference between internal matters and then external matters. We've seen this repeatedly when it comes to trade, when it comes to China, when it comes to Brexit. It's one thing to bicker and fight on European matters, and another very different one is to do it on foreign policy. And we have seen a lot of unity, I would argue, between the French and the Germans. Nothing gets done in Europe if Berlin and Paris are not aligned. They both say they are. And of course, the Eastern Europeans saying that they appreciate the help that they're getting from West Europe. There's usually at times also a tension between the two of them, but on this, they all have an interest in really making sure that Putin is pushed back.
The terseness of Secretary Blinken's statement yesterday, for me, was stunning. I think I heard that from Greg Valliere, including David Rubenstein joining us late on surveillance yesterday. Maria Tadeo, what will French and German diplomats listen for in the Lavrov or Putin response this morning?
Well, they want to look at the references to NATO about Ukraine potentially joining or not, and in particular, what to do with Eastern Ukraine. And Tom, in Europe today, the focus is very much on those Eastern promises. An official this morning told me the situation is actually very tense. The Ukrainians are saying the Russian-backed separatists attacked a school. The Russians say that it's Ukraine that's escalating tensions, and they worry that at any point, considering the tension that's going on in the area, we could see something that could spark military action. So there's real concern about what's going on in Eastern Europe today, particularly in Eastern Ukraine. And what I hear is that far from de-escalation, officials are telling me that in the past 2 hours, things are moving very quickly and they point to potentially escalation. So this is a very different tune to Monday.
And Maria, honestly, that's what the market is reflecting right now. Certainly that's been the tone. I was really struck by Jens Stoltenberg, the Secretary General of NATO, yesterday coming out and saying that they're actually thinking of building up some NATO troops in Eastern Europe in response to what he said is the new normal of aggression from Russia. What are we going to learn in this two-day meeting that ends today about the possible buildup of troops?
Well, look, what they say right now is that they don't believe or they don't trust the video. They say we're never going to take anything Russia put out at face value. They also say that they worry, and this is the detail, perhaps the technicalities of war that they really pay attention to at NATO. When you pull back, it's not just the men. That is not the point. You have to pull back everything. It's the ammunition, it's the weapons, and that's a concern, particularly in Belarus. That's the fastest way into the Ukrainian capital. And what they say is that if Russia decides to pull back the men, but they leave the weapons, that is equally concerning because it means they're ready for an attack. All they need to do is bring the men back.
Well, but Maria, I want to get to this point of the new normal, right? This idea of ongoing aggression. What is this response going to be from NATO? I mean, what's the approach? Is it going to be this sort of battle of information? Is this going to be some sort of buildup in military alliance? Is it going to be all of the above? What's driving this new rising tension that does not seem to be possibly dissipated anytime soon?
Well, Lisa, every Eastern European official that I've spoken with, they say that they want more NATO equipment and they want more NATO troops in Eastern Europe. That is something that is clear now. So I would not be surprised to see that NATO, particularly on the Eastern Front, gets bigger and has much more investment, and European, in particular, countries come to terms that they can't outsource everything to the United States. They need to pay up more. So this is something that I would not be surprised to see in the past, well, in the future 5-2 years, that it goes bigger and gets bigger. In terms of the new normal, is this going to be the new normal. When you listen to the Secretary General, he said it very clearly. Russia and China are working together. These are authoritarian regimes. They do not believe in democracy the way that we do, and they're going to continue. Vladimir Putin, by the way, a week ago said, we don't see any limits to the partnership that we can have with China. There's nothing off the table.
Maria, we've got to leave it there. From the European Commission today, Maria Tadeo, and waiting, Tom, for that news conference from the NATO Secretary General, Jens Stoltenberg, moments away.
You know, you've got to believe they're waiting on other matters as well. I mean, you don't want to go out and do a press conference, John, without a full briefing. And granted, we're into the European afternoon, but I would say it's a movable feast. And I see that in the market. Again, John, gold ebbs away a little bit. You mentioned earlier, oil, Brent down $1.60 right now. Even the 2-year yield, well, the 2-year yield, excuse me, the 10-year yield in the U.S., under 2%. That shows attention as we await Stoltenberg, but far more as we await the Russian comments.
199.98 on 10s, just south of 2%. Lisa, you've got these two disputing claims at the moment. The US disputing claims of a Russian troop pulled back, Russia disputing US claims of a troop build up. We hear that same claim coming from the UK, the British government as well. And then there's this other headline in the mix this morning that gets a lot of people's attention. Russian-backed separatists in Luhansk claiming that Ukrainian forces violated a ceasefire agreement. Hasn't been verified. That's one of the claims that's out there at the moment, just adding to the tension for this equity market.
It feels like a tinderbox right now, that everyone's looking and distrusting one another and trying to figure out when it's going to become inflamed, or can they reach some sort of diplomatic solution. It seems like right now, the diplomacy aspect is taking very much of a public-facing information war, which isn't very constructive, at least in the very near term.
So we've got to work through several headlines, and when that news conference starts, we'll bring the headlines from that. At the moment, futures pulled back by 0.5% on the S&P. On the Nasdaq, we're down by 0.7%. Yield to break of 2%. That's something Tom's picked up on. Yields are lower by 4 basis points now to 199.80. And crude, Tom, this is the one that stands out, right?
Yes.
You've got equities down, you've got Havens bid, I get all that, but crude, 91.84. That is not the spike in crude people might have been looking for this morning.
Given every mix we've got, John, I would suggest Brent should be 95-ish, and it's 93-ish, and that is the oddity this morning.
Going to talk about this equity market as well with Binky Chadha, the Chief Global Strategist and Asset Allocation Head over at Deutsche Bank. Lisa, as we start to think about maybe margins this year, are under threat from higher prices.
If you look at a lot of the downward revisions, that seems to be the implication. But which margins, right? Is it Walmart or is it Gucci? Gucci seems to be doing just fine. Are we going to see the Walmarts of the world struggle a bit more?
Walmart earnings are due in about 5 minutes' time. Tom Keen's going to be across them when they drop. Futures down 0.5%. Yields drop 4 basis points. Crude does as well. We're down by 1.92% on WTI at 91.86 with Tom Keen, Lisa Abramovitz and Jonathan Ferro for our audience worldwide, heard on radio, seen on TV. This is Bloomberg Surveillance.
the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
There's a real risk that the Fed is about to embark on a policy mistake.
It's a really tricky time for central banks.
Inflation has been a lot stickier, a lot higher, and it's actually broadening out as we sit here.
I do think that there is a piece of this inflation story that will have to be squeezed out by the Fed.
They got a little bit too far behind the curve. They're trying to get aggressively in front of the curve.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Your equity market down 0.5%. On the S&P, on the NASDAQ, Tom, we're down 0.6%. It's claims and counterclaims.
Now, claims and counterclaims, we've got headlines out moments ago, and of course, you see those first on Bloomberg with our worldwide best in headline class. It's simple, John. Russia Defense Ministry just talking about Belarus drills and troop movements. This is not what we're waiting for from Lavrov and Putin, but it's 7 a.m. Wall Street time, some words from Russia.
We're familiar with the claims and counterclaims now, Tom. The U.S. disputing Russian claims that there has been a troop pulled back. Russia disputing U.S. claims that there has been a troop build up. Tom, as we wait to verify that, clearly jitters in this market. 10-year yields down by 3 basis points, a brief break of 2% again.
Well, it's a break here, and we're seeing some haven move. As we discussed 5 minutes ago, oil doesn't give us the kind of haven support you'd expect. 93 on Brent. John, I know you're going to do the data check, but I would really singular on gold, which is really legged up, not through 1900, but it's sort of a new region, if you will, higher gold prices.
We've got to work through the earnings as well, Lisa, waiting for Walmart, which will drop any moment now.
And really the key issue that a lot of people are looking for is how much consumers maintain demand, keep buying as much stuff, even at higher prices. And frankly, you have seen the K-shaped recovery really exemplified by some of the earnings with some of the stores, the retailers that cater to lower income workers seeing more of a hit than the Gucci's of the world.
We got some Fed speak later too.
Oh, we got tons of Fed speak.
TK can hardly wait.
I mean, TK, are you speaking for yourself? I'm just saying.
Can we do who's not speaking?
I'm excited for another round of Jim Bullard, aren't you, Tom?
Yeah, I am. I mean, you know, we need more of our good friend from St. Louis. But seriously, John, it's almost to the point you say who's not speaking to
Chairman Powell, and that's who we want to hear from.
Yeah.
Right, and you might have to wait until the middle of March with Tom Keene, Lisa Abramowitz, and Jonathan Farrow working through Walmart earnings as well, with futures down 0.4% on the S&P, and the NASDAQ were down 0.5%. They dropped, Tom. We'll read through them. Fourth quarter revenue, $152.87 billion. That's quite a number, isn't it?
Yeah.
The estimate, $151.67.
They mentioned a planned share repurchase of $10 billion or so, but I would say it's pretty much on track. You do look at the foreign exchange adjusted net sales increase about 3%. What I'm seeing here right now is pretty much on track, John.
The guide for full year 23, as you say, Tom, in line, on track with growth outlined last February. The stock, Lisa, up by about 1.75%, 135.87.
I wonder if we're going to talk about this particular quarter as the beats are rewarded with meager gains, and the losses, the misses, are met with losing a quarter of your value. And that is what we saw yesterday with Roblox, which, yes, I keep harping on because it's been the bane of everyone's existence with children and video games. 8:30 a.m., we get U.S. initial jobless claims. I am looking at the continuing claims, which will probably fall to a new low for the post-pandemic existence here. When do we say we're there? When do we say we have reached full employment? And this has been one of the conundrums that as we get that slew of Fed speak, a lot of people are trying to parse through. How much slack is left? How much does it feed into wage inflation that has been coming in hotter than a lot of people have expected? Today, Bank of executives are expected to speak at Credit Suisse's Financial Services Forum, including David Solomon of Goldman Sachs, as well as Brian Moynihan of Bank of America. How much are they going to talk about that consumer? How much are they going to talk about the savings getting depleted and the fact that you are seeing signs that lending is starting to pick up, particularly in the riskier sectors? And today, for both of you, I know you love it, central bank speak continuing. ECB Chief Philip Lane, Chief Economist Philip Lane is speaking at 9 a.m. I'm particularly interested in what he has to say, particularly because the ECB faces a less certain trajectory of inflation and growth. St. Louis Fed President Jim Bullard, your favorite, at 11 a.m., and Cleveland Fed President Loretta Mester speaking at 5 p.m. There is so much uncertainty right now. It's highlighted by that Bank of America Merrill Lynch option volatility move index that measures the implied volatility in Treasury yields, which is the highest level, John, going back to March of 2020.
Lisa, thank you for that. Just to return to the Walmart numbers, Tom. At first look, the numbers look decent. $10 billion buyback in the mix as well. The CEO saying we're being aggressive with plans, with strategy. EPS in at 153, the estimate 151. And then that line on supply chain costs, Tom. We've navigated higher supply chain costs well. The line out of Walmart this morning.
I do agree, the forward view. Walmart's sometimes reluctant to do that over 20, 30, 40 years, but the answer is they've got to do a forward view. That'll be important. I think it's important, John, to note that Amazon is a small business with 1.6 million employed. Walmart, 2.2 million. The size, the scope to scale the size here is unimaginable.
I'm with you, Tom, but what about the change at Amazon? That's been a big story, hasn't it?
Huge.
That has increased so much over the last few years.
Yeah, and Amazon is in a completely different framework. I think retail to retail here is completely wrong in comparing the two. But nevertheless, as Mike McKee mentioned yesterday on retail sales, online sales were up 14%, 1.4. And again, that's some inflation lift as well, but still a big number.
Walmart with a lift up 0.7% of the pre-market. With us now, Binky Chowdhury, Chief Global Strategist and Head of Asset Allocation at Deutsche Bank. Binky, let's start with your earnings call and guide us, please, where those earnings are going to come from. Is it revenue growth or margins?
Good morning, John. So we are at $230 for S&P 500 earnings this year. That, in round numbers, would be about 10% earnings growth. And I'd say, our earnings growth numbers basically, come off of our house economics view for the U.S. and globally. That's all it basically is the way that I would put it, simply, unless one starts looking at sort of a more disaggregated level. And I think, the points to note here are basically, obviously, as we were coming out of the pandemic recession, we have huge growth rates that are gradually basically decelerating. So the question is, how much will growth decelerate this year? As I said, we think around 10%, that's coming off of 50 and 70% and the like. And that's just sort of a gradual reversion, basically, to trend. 10% sounds kind of high, but, outside of recessions, that's kind of what we've had on average. So.
Binky, you've got a great analysis in your note. And of course, this is all of the Deutsche Bank platform. Follow the money. Look at the flows that are out there right now. Ukraine, Russia, Washington. Is that part of flows? Is geopolitics part of flows? Is the pandemic part of flows? Or are we finally removed?
I would say, if you look at flows, I'd say the most important thing to point out here is that, clearly we've had quite a lot of volatility across markets, basically. But if you look at, flows into risk, and S&P 500, U.S. equities, they've held up remarkably well. If you think about, what we got in terms of equity flows last year.
Come on, you and I are ancient enough, Binky, where we know a correction is 10%, a bear market's 18%, and a real bear market's 30%, and we're hysterical over a 7% down move.
Yeah.
Do we need to steel ourselves for more?
I'd say that, we did get intraday down to sort of 11, 12%. We didn't manage to close down 10%. And I think that, it's a pretty big deal in terms of a move. The sort of, market narrative is that we get 10% corrections all the time. That's just patently false outside of recessions. So, we had basically a shock to risk markets. We're still sort of churning through the pullback, but it's just a pullback, I'd say.
What's the VIX value here for you? In reading the VIX, does it, or I should say forward VIX as well, but reading spot VIX, is it a value for you in discerning mood of market and future of market?
Yeah, and also very importantly, and I'd say very importantly in this particular market, because retail investors have been involved in a big way, the options market, is on par with the cash market in terms of volume, maybe ahead if you're thinking about notional volumes traded. And of course, VIX is implied volatility rather than realized, and the difference is, the risk premium. So, one of the mysteries of the economic and financial market recovery, since the pandemic was why vol remained basically so elevated. We ascribe that very much to the increased use of basically the options market. And right now, there's very little question that basically the VIX is pretty elevated and as a result, what you've seen basically is, positioning of the systematic strategies is down sort of like to the 20th percentile. And so to hold the VIX here, you need a steady diet, basically, of new incremental bad news. Absent that, the VIX will come down. Systematic strategy exposure is going to grow. The market's going to go up.
We've got a steady diet of breaking news. So we're going to have to leave it there. But don't be a stranger. We're thrilled you came into our offices here at Bloomberg. John?
Hey, Binky, great to see you. Great to see you. Binky Chatter there of Deutsche Bank. Lisa, that headline that jumps out from Walmart.
Yeah.
Costs in 4Q.
Yeah, the supply chain costs in the U.S. were more than $400 billion higher than expected in the fourth quarter. That said, let's just put this gain in perspective, that this is the first time since May 2021 that Walmart shares have risen after earnings. So actually, this is an anomaly rather than the norm for a company that really does represent the U.S. economy.
Tells you something about expectations. 136.29 on Walmart in the pre-market, up 2.1%. Happening right now. The NATO Secretary General Jens Stoltenberg delivering a news conference. Tom, here are the headlines. No sign of a Russian withdrawal so far. NATO continues to seek diplomatic solutions. They call on Russia to do what it says, withdraw.
The withdraw is the heart of the matter, and early in the Blinken statement, he went right to Minsk to the two agreements of 14 and 15. By all analysis, John, those were broken immediately. They need something new, and that's the decision tree. Putin says Minsk means this. Stoltenberg in the West says Minsk means that. That's what we need to learn about today from Lavrov and Putin.
The news conference continues with Tom Keene and Lisa Bravitz. I'm Jonathan Ferro. Futures are down 0.4% on the S&P, on the Nasdaq down 0.5%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word. I'm Ritika Gupta. The U.S. says that Russia is adding up to 7,000 troops to the 150,000 it says are already near Ukraine's borders. The Kremlin calls that assertion fake. It said earlier that some Russian forces in the region are returning to their bases. Meanwhile, European Union leaders will discuss the Ukraine crisis today. Meanwhile, Europe looks to be gradually leaving the pandemic behind. Germany is becoming the latest in the region to unwind restrictions that have disrupted life for 2 years. Chancellor Olaf Scholz announced that most of the COVID curves will be rolled back by March the 20th. Austria and Switzerland are planning similar steps. Hong Kong is deploying a tactic used on mainland China to root out coronavirus cases. It's planning a testing blitz of the entire city. Bloomberg's learned that Chinese medical experts will probably be brought in to help. Local media say the push will begin in early March. Federal regulators are investigating complaints about Tesla cars that suddenly brake at high speeds. The National Highway Traffic Safety Administration says it has received 354 reports of so-called phantom braking. No crashes or injuries have been reported. There's been no comment from Tesla. And Airbus is leaving the worst of the pandemic behind. The company posted record net income last year and has set plans to reinstate a dividend. A year-end delivery push helped Airbus retain the crown of the world's biggest plane maker for the third year in a row. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.